Welcome to the course on FAR for the Galactic Trader. This is a training seminar on the software that PAS and my own company, the Merriman Market Analysts, have put together. And this is a market timing program. Specifically, almost exclusively, it is a market timing program. It is not an automated trading system. This is not a program where you can sit and click the button and it's going to tell you right now buy or right now sell. There are programs like that. They're based on technical studies mostly, various technical studies. This is not that kind of program. This is a program that will help you to determine, to identify optimal times when the markets are most likely to make reversals. And if you have that knowledge, the knowledge of market timing, then your technical trading programs will work more efficiently, because you know as well as I know that if you're a trader, you are inundated with zillions of false technical signals throughout the course of a lifetime. You get a lot of signals that say buy and they don't work. You get a lot of signals that say sell and they don't work. I mean, yeah, they work over 50% of the time, but if you can find something that can help you increase those legitimate buy signals and legitimate sell signals by 10%, you've got an edge. And what I'm suggesting is that the market timing program, like the FAR program, the Financial Astrological Research Program, will give you that edge that will make your trading, your automated trading or your technical trading program more efficient. Okay? So now you'll know when to pay attention to your technical trading program and when not to, I think, with the use of this program. Based on the geocosmic factors that this program analyzes, you will be able to achieve a sense of how, not only when the market's going to change, but how big the reversal will be. Is it just a little one that's going to last 1 or 2 days, maybe 2 or 3%? Or is it something that can be more substantial, that might last 3 weeks and even longer, and maybe cover 5%, maybe even 10% or more? This program will help you understand when and how big the move is likely to be, and most importantly, the probability of the success that you can expect by catching a turn around this time. So as I said, this can be a very valuable edge that every trader in the market seeks. Anything that gives them an edge or her an edge is important. Now, in the course of this presentation, you'll not only see the studies that we put together and how they work, but these studies, I think it's important to know, are based upon the studies that have been reported in various books that I've written. This program is designed to make my job easier from the work that I've done in 3 different books. One is the first book I wrote, which is the Gold Book. And I'm giving you this information because if you want to understand how this was put together, the foundation for which these studies are based, they come from this book, the Gold Book, which you read in the Gold Book. The geocosmic studies done in the Gold Book are included within the course of this program. And more recently now, the work that I've done in Volume 3 of the Stock Market Timing to help me determine what critical reversal dates are significant for the U.S., Japanese stock market, especially the U.S. stock markets. The determination of those geocosmic studies was the basis for this book, and it was just translated into the Galactic Trader program, FAR for the Galactic Trader. And the next version of the FAR part of the Galactic Trader will be the material that's in this book that just came out last week. Well, I just got it last week. This is the first place we've really sold it. It's Volume 4 of the Stock Market Timing book, Solar-Lunar Correlations to Short-Term Trading Reversals. Okay? And we're going to spend a lot of time on that today, because even though it's not totally programmed into here, just with a calculator, a hand calculator, you can compute what I call the weighted value scores. that are indicated for every sun-moon combination for the last 60 years in the Dow Jones Industrials, the last 18 years in the NASDAQ, the last 16 years in the Nikkei, which are reported in this book, but of course they will change as time goes on a little bit. And with a calculator, you can calculate that from this program, or you can wait a couple months when we'll have the next upgrade for the FAR program, which will include these studies in it. And this is important if you're a short-term trader. The solar lunar correlations in the stock market are extremely important if you want to catch those 1 to 3 day swings that will give a high probability of 4% price movements. I mean, to me, it's the optimal thing for a short-term trader. You have minimal exposure in the market and highest probability of catching it. That's what I like. I only have to trade maybe anywhere from 2 to 6 days a month. That frees up my time to write these books. So you can have the advantage of looking at what really works without spending the hours and weeks and months and years I have to spend writing these books. But I don't have to trade every day anymore. I can limit myself to 2 to 6 days a month, and I have a probability close to 90%. And for those kinds of trades, and I'm real happy. When I only have 100 points in the DIA, which is all I trade, pretty much I trade. I trade futures too, but pretty much the DIA is my favorite market to trade, the diamonds they call it. And so I don't have to risk 100 points. And even with that, I'd say the probability of success is close to 90%. Now, having said that, it'll probably change from this point onward, but it's been good for the last couple years doing that. And the average gain would be 300 points. Okay, it can be anywhere from, I would say, 200 on up to 700. And we're talking 1 to 3 days, all you have to be in the market. So somebody asked me earlier, am I going to talk about intraday trading in this class? No, not specifically intraday trading, but tomorrow or very late today, I'll show you the parts of the program that will tell you which days have the highest probability of giving the biggest swings, the greatest volatility, which makes intraday trading valuable, and which days give the lowest price ranges, which is another day that if you're an intraday trader, you don't want to waste your time spending, trying to catch a market that doesn't move much. I mean, it's no fun trading silver when it moves 2 cents a day. It's hard to catch that high and low. You won't lose much, but you're wasting your day. But if you can catch a day that's going to move 11 to 15 cents, that makes it worthwhile. If you can get 2/3 of that, it's not a bad trading day. So by understanding the high volatility days, isolating when those are, that can also free up your time to do other things in the month where you don't want to waste it watching a screen all day when nothing happens. Okay, we're going to be using the manual, the MMA's Financial Astrological Research Program for Market Time, the FAR manual for the Galactic Trader, as our guidebook. And we're going to go right from the beginning of the book to the end. We'll start here with Chapter 2, which is basically getting into the FAR program from the Galactic Trader. Now on the screen is the window that pops up when you turn on your Galactic Trader. And this is the version 4.00. And on the top here you have a toolbar, which is File, Chart, Page, Planets, Indicators, System, Window, Utilities, and Help. I think I stood at the Help button too long here. Let's get out of that. So the first thing we want to do, and Ted will go over this later in his presentation too, when you go to File, you go to Symbols and New Symbol, and you go down the format here and pick which format you're deriving your data from. You must have data. You have to have end of the day or historical data in order to make the FAR for the Galactic Trader work. I happen to use CSI, so I would highlight CSI, and if I want futures, I'll highlight futures. Okay, so I got CSI and futures, and then I have to go into my system and find the file in the subdirectory that I want to copy onto. So if I want to copy, if I go to Auto Create, I'll go to the C drive, and then I go to the file called quick, and then I look under quick to find out which, let's see here, which ones I want to, which file then has the current data. Well, my current data is going to be under data. So C, quick, data will then give me a bunch of subdirectories here of which I have a list of stocks or commodities. Let's say that I want to bring in energy. Okay, if I double-click energy, I'll then get a list of what my contracts are in the energy market. So I've got natural gas futures, heating oil, and crude oil here. So if I hit OK, now I'm going to copy them into the FAR for the Galactic Trader program. I hit OK, and it's just like that. It's created. Okay, file is created. So now I go into chart. Once I've downloaded my historical data in the FAR program, I go into chart. You with me so far? Most of you will find this very easy just by following the instructions in the Galactic Trader manual. And if most of you have Galactic Trader, so you probably already know how to do this. So I'm going into chart, and let's say I want to pull up, let's say I just did a futures contract, so let's pull up crude oil. I highlight crude oil. In fact, I can double-click it. Whoops. I highlight crude oil. It comes to my right-hand side of the screen. I double-click it, and it's downloading crude oil into the screen so I can use it for analysis. And I have probably close to 20 years of data. I think it started in, what, 1983, 84, the futures market. So the more data you have, the more accurate your results are going to be. The less data you have, the more extremes your results are going to be. So the more data you have, the more it smooths it and gives you a more correct interpretation of what's useful and what isn't. So here's crude oil data, current as of yesterday. Well, crude made a new high yesterday. Interesting. Now, what I like to do, I like to go to the far right screen here called Chart Options and create a picture of a chart that I'm used to. This only has 50 bars on here. Whoops. Well, actually, this is going to give me the bars of memory. I want to take 20 years of data, so let's say I'm going to put 3,000. I think that's going to be close to 3,000 daily bars. So let's reload everything I got in the history, first of all, which takes a second to do. I think the automatic is 1,000 days. But I want to get as much as I can. I think I got 3,000. The next bar on your right, this little T-square bar, is showing me the number of bars displayed on the screen. Well, I don't like 50. That's too small for me. I like 108. I see more with 108. Okay? So now I'm set up. I've got all my history in here that I can analyze, that I want to analyze. I've got a screen that shows me 108 trading days. Once you get more than 120, I think it's too crowded. Anything less than 100 is too small for me. I like it between 100 and 108 trading days on the screen. Okay, now, how do you get into FAR? You go to Planets, click it once, and the bottom of the screen, you'll see Open MMA Window. That's where all the FAR directories are. They're in one simple subdirectory here called Open MMA Window. And up pops a menu called MMA Menu, MMA Studies on your upper left-hand screen. Any questions so far? Okay, now if we click the MMA Studies menu, we get all of these subdirectories. And here's the hidden treasure of this program, all in these directories. We start with gold reversals. And this is also what shows on page 3 in your manual. And under gold reversals, we have MMA level 1, level 2, and level 3. That probably is Greek to you, unless you've read the gold book. Then you know what level 1, level 2, and level 3 signatures are. Basically, level 1s are the most important. They have the highest correlation to primary cycles. And if you don't know what a primary cycle is, that's a whole other subject. And I'll get into that if I have time a little bit later. But they're generally speaking, they're the highs and the lows of every 15 to 21 week cycle in gold. Okay? Every 15 and 21 weeks you get a gold primary cycle, and the high of that is called the primary crest, the low of that cycle is the primary bottom. So level 1s have the highest correlation to the primary cycles. You want to see these present if you're looking for something that's going to be the higher low of the 15 to 21 week cycle. Level 2s, they're more consistent with major cycles, the 5 to 7 week cycle. Every cycle is composed of 2 or 3 phases. A primary cycle is composed of 2 or 3 phases known as major cycles. Okay, they last every 5 to 7 weeks. And this has a high correlate. Level 2s correlate more with the major cycle. The level 3s will be the trading cycles. Within a major cycle, you get 2 or 3 of these trading cycles that last 2 or 3 weeks. The higher low of that 2 or 3 weeks, that might show up more as level 3s. Okay, the second directory is called stock reversals, and this is level 1, 2, and 3 as reported in this book, volume 3, the ultimate book on stock market timing, geocosmic correlations to trading cycles. Okay, and in that book, I analyze at least the last 20 instances of every planet in relationship to every other planet, its correlation to a primary, half-primary, major trading cycle or 4% move. Okay, and I gave it values. And the highest values that had the greatest correlation to primary greater, again, was called level 1. And there are a few that have level 1 correlations. And the next highest frequency correlating to major cycles more would be level 2, etc. Level 3s would be the trading cycles. Next we go to MMA ingress. As, you know, you really don't need MMA in front of that, it's just ingress. It simply means when a planet changes signs. What does that mean to a trader? Well, anytime a planet changes signs, there's a shift in collective psychology according to the nature of that planet and the sign it's changing into. For a trader, it's very useful to watch transit of Mercury or Venus changing signs. Okay. If you're looking for a long-term trend, then you want to look at Saturn, Uranus, Neptune, and Pluto changing signs. Those are ones that are going to last 2 to 20 years as far as trends. As an example, when Uranus went into Aquarius for 7 years, from 1995 to 2003, that Uranus and Aquarius is technology. And that was a big move in technology. I mean, everybody's focused on technology. First, they were focused on it because it soared up. Now they're focused on it because it's making them poor. But it's all technology that's on their consciousness now. It made me rich, it made me poor. Okay. Next, it's going to go into Pisces in just a few weeks. And it'll be there for 7 years. Technology is still of interest, but it's going to be technology more with biology, I think, or more with chemicals, or drugs or pharmaceuticals, which is Pisces. That'll be the big trend for the next 7 years. Okay? But you can do it also with Neptune, and you can do it with Saturn. Saturn's going to move now from Gemini, where it's been for the last 3 years. Wherever Saturn is, we tend to get a depression, either of supply or price. Well, Gemini rules communications. So what took a big hit when Saturn went into Gemini? Telecommunications. All your $30 to $50 Nortels are worth what now? Your Lucent Technologies worth what now? Not much. About 2% of what it was in 2000, early 2000. Well, fortunately, Saturn will move out of Gemini, and they'll get a little bit of a lift after that. But it's going to move into Cancer. So the depressive areas are going to move more toward domestic, home sales, appliances, things like that, maybe foods and restaurants. This is the theory behind it. So you get a 2 to 3 year cycle with Saturn moving into a sign. And this tells you, the ingresses tell you when the planets move into signs. MMA Silver is based on the studies of the Sun, Moon, and Silver book. It was the first effort that I made to do a short-term trading book on a market. And I had to do a lot of it by hand. I had help with the computer, but not like I have now with this Far for the Galactic Trader. I mean, that book took me 2 years to write, and it's only like 120 pages. I could write it in a week now with the Galactic Trader and Far. But anyway, in this study, I isolated sun-moon combinations that correlate with crests, those that have a very high correlation to crests, troughs, high correlation to trough, both, which means reversal, a very low correlation with crests. The no crest means it has a correlation. It never happened. There's never been a crest with that sun-moon combination. No trough, or no trough plus means there's never been a case at the time this study was done where there was a an important low formed with this sun-moon combination. Now, I wrote that book in 1992, and I only had time to use 8 years of data, which was maybe 2,000 days of data. But now I could do a study of 35 years of data much quicker than I could back then, just looking at every price bar for 8 years. MMA, NYSE, that simply identifies transiting aspects to the New York Stock Exchange chart, which was born May 17th, 1792. I'm going to go through these again later and give more detail, but right now I'm just introducing you to what each of these directories cover. So this is simply transits to the New York Stock Exchange chart, which can have an effect upon changes in the Dow Jones Industrials and any other U.S. market. MMA bonds, this simply analyzes or identifies dates of transits to the Federal Reserve Board, which I find is useful for trying to identify tops and bottoms in the bond market or T-note market, and indirectly even with currencies, since they're affected by T-notes and T-bonds. So the first 6 directories here are simply identifying dates when certain geocosmic factors are already in effect. Okay, they're telling you when they're in effect, when they've been in effect, when they're going to be in effect. And you have to make the assumption, or I make the assumption, that this could indicate a potential change in the market. There's no research here for you. The research has already been done. It's simply reporting the results of facts or research that's been done by myself. The gold, stock reversals, MMA silver, that's all the results of research I've done in the 3 books I've told you about. The MMA ingress, MMA NYSE, and MMA bonds, they're simply a listing of transits that take place in the heavens. And you can find that in any ephemeris. It just is more convenient for me to press this button than to get an ephemeris and look at the chart and, deduce. Now we get into what I think is the real nuts and bolts, the real value of this program. We get into research elements. MMA research is a lot like the options section in the planets and aspects of the Galactic Trader. I'll get into more detail on that in a minute, but MMA research will help me identify a cluster zone, which is essential to determining a critical reversal date. I need to identify a time band in which a lot of geocosmic signatures are present that had high correlation to reversals, as shown in these books I talked about. I need to identify where these clusters of planetary aspects are occurring to get a grip on when a big reversal, when a primary cycle top or bottom is likely to form. Okay? And this MA research helps me identify where that cluster is. Filtered waves, this is my favorite part of the program. This allows me to identify tops and bottoms from which a certain percentage of reversal has occurred. And from that, I can then dump those dates into a database that will be analyzed by this program. And it will report to me how many times each planet was in each sign for these reversals. And from that, I can deduce what planetary combinations have a high correlation to reversals in various markets. We'll spend a lot of time on this because it's the basis for Volume 4. It's the basis for Volume 3. It's what I use whenever I'm thinking about putting a trade in the market. This is where I go in this program to see whether or not it has a high probability of making reversal at this time. Own research. I don't use this as much as I used to. It used to be my favorite. But as you'll see, it takes a little more time to do it. This allows you to put the mouse on any higher low that you think is significant in your history, and then it will analyze the astrological data of the dates that you picked were important from this chart, and then you can deduce when that's going to happen again. Volatility, this we'll spend our last amount of time on, whether it's late today or tomorrow, I don't know, but this is for day traders. This is a part of the program to help you identify which days have a high probability of big range days. And those are ones you want to focus on if you're a day trader because you can be in and out profitably potentially profitable a lot during those days. Whereas you get a low volatility day, you put a position on, you might be wondering at the end of the day, gosh, should I get out or not? It didn't do anything, and I want something to happen. So it keeps you in and out of the market if you're a day trader and frees your time up. Baseline, this is real important, because with the baseline, you can take it beyond the phase of quantitative study into probabilities. And our next version of FAR is going to actually do a lot of this work for you that you still have to by calculation on this version. But if I have in filtered waves or own research or volatility, I show something that appears like it's going to occur a lot of times. But I go into baseline, and I see how many days it actually did occur during the beginning and end of the study. I might find out the reason why it showed up so frequently in my controlled study is because in my baseline study, it showed more frequently. For instance, maybe Mars in Sagittarius shows up a lot for reversal in gold. But if I go to baseline, it might show that Mars was in Sagittarius 3 times more than it was in any other sign. So of course it would show up more as being significant in my quantitative study. So you need to do a comparison of whatever your rate of frequencies are in filtered waves, own research, or volatility to the baseline study. You got to do a comparison between them to see whether or not it's really significant. And as I say, the next step is going to, the next version of this is going to do that automatically for you. It's going to compare the percentage of your experiment study to the percentage of your control group. And then you'll divide the one into the other and get a weighted value average, so that anything over 1 means it occurs more frequently than the normal. Anything less than 1 is less frequently. And the idea is anything over 120 in a weighted value score is something you want to pay attention to. Anything over 150, you really want to pay attention to. Anything over 200, if you don't trade it, then you're stupid. You've got to take that trade. I mean, it has a huge probability of being successful. You're not stupid, by the way. It's just you're cautious and conservative. But there's your opportunity. It's looking you right in the face, and you see a 200 weighted value score. And by the way, that's what Volume 4 does. It breaks these down to weighted values. And it has the 120 scores, the 150 scores are better, or the 200 scores are better. And it's the 150 or better that I rate is 2 or 3 stars for short trading reversals in the MMA cycles report. And those are the ones that have the close to 90% success ratio. Okay, that's an overview of what we're going to cover today. Any question up to here? Okay, let's go to gold reversals, which will be Chapter 3. And as you'll see on page 5 in Chapter 3, the level 1 signatures, as reported in the gold book, are basically aspects between Saturn-Neptune, Jupiter-Saturn, and by the way, this is arranged according to their rankings of probability to big reversals in the gold market. Saturn-Neptune had the highest correlation to big reversals in the gold market. Jupiter-Saturn was second. Jupiter-Uranus, Jupiter-Neptune. These are any major aspects. Mars-Jupiter, Mars-Neptune, Venus-Mars, Venus-Uranus, Mercury-Mars, Sun-Uranus, and then the stations involving Venus, Mars, Saturn, and Neptune. These are not the same that you'll find in the stock market. Okay? The studies demonstrate how major reversals in markets tend to happen within 3 trading days of one of these geocosmic signatures. In fact, 80%, over 80% of primary cycle troughs and crests for gold happened when one of these signatures was close by. Now, this was from the study done from 1974 to 1982. This still works pretty good. I would say over 80% of what I report in that book is still valid, probably close to 90%. The successful application of a level 1, 2, or 3 is dependent upon a concept known as clusters. A cluster occurs when there are multiple geocosmic signatures in a short span of time. By taking the midpoint in time of the cluster, the point midway between the first and last signature, you arrive at a critical reversal date. Many financial markets will reverse their current trend within 3 trading days of that critical reversal date. However, the critical reversal date involving a cluster, to be valid, there must also be at least one level 1 signature also within 3 days of that midpoint or reversal date. Okay, if we click the left mouse button on MA level 1, you will see that we get these green, I've got it listed in green bars with circles on the top. You can change that if you want by going to, well, let's see. Let's go to planets. Let's go to, I think you go to aspects. And we have level 1 gold already highlighted here. Let's say that we want to edit it. The color's fine, the style. Let's make the thickness 2 instead of 1. And the symbol, we've got a circle. Instead of a circle, let's see, circle 2. Yeah, let's do circle 2 where it's a solid circle. It'll stand out more. We hit exit, and we should be able to, I think we can exit this and it will do it automatically now. Yeah, now you can see it a little better, can you not? It's a solid line. So we want to start with level 1 because if we're going to have a big reversal, we want to see level 1 within 3 days. It doesn't mean every level 1 is going to give you a big reversal because a level 1 by itself isn't a cluster. A cluster means 2 or more. Better yet, 3, 4, 5, 6, or 7 combinations of level 1, 2s, and 3s, but at least one level 1. So we want to see a level 1 nearby big reversals. Well, if you look at the lowest price on this chart in gold, which was mid-November.
You got crude oil up there,
Oh, I got crude oil? Yeah. Okay, well, it works for crude oil too. You're right, I should put gold up here. But there's a correlation there between the two. Like I say, these will work for a lot of markets. But it's interesting how it worked for the crude oil. Look, we got real close to this bottom in crude oil here. We're very close to this top within 1 day. And it looks like we're getting close to another one here in a couple days. Let's see if we put the mouse button here if it tells what days these aspects are going on. Time frame, let's see how I do that. Well, I'll come to that later, how you can tell what days those are. I thought I could just click it and it would give me that day. Let me try it one more time. Crosshairs? Will that do it? And now click it? And that gives me a date? No?
Just bring the crosshair over to it. It's February the 14th.
Yeah, how do you do it?
Just use the crosshair. Just bring the crosshair over to the...
Let's see, crosshair. Okay, now where do I put it?
Just bring it over and touch it again.
Right, put it right on it?
Yeah. There you go. You had it.
Oh, I had it and I blew it. Okay, let's try it again. One more time here. Crosshair. Put it right on it and click. Oh, I see. Just hold it. I see. Let's try it again. Just hold it. February 14th. Okay. So 14th, I presume next one's the 15th? 17th? 14th. Next one's going to be... See, I'm learning the program too. 21st. Okay, so 14th to 21st, I got 3 signatures. 3 level signatures. So somewhere in there, we're looking for a big reversal in gold, if not the crude oil or any other related market. The war in general. That's it. That's what it says. Well, it's interesting that there'd be all level 1s at that time from the gold. It might show up differently with the stock level 1s and 2s. In fact, whoops, didn't mean to do that. Let's pull up, what did I just do here? Let's go back here. Let's pull push this over here. And let's get rid of crude oil and let's bring up gold. So we go to chart. We go down here to gold. Double click it, and it's loading up gold. Go through a whole process over again because it's good to repeat how we do this so you can understand the flow of the program. And let's see, I've got gold from 1974, so that's 28 years times about 260 some days a year. What does that come out for a number of? By the way, if you got your calculators, have them out. You're going to use them a lot here. It's around 7,500? Okay, so let's put 7,500 days in here. Okay, blow this up. We have 1,000. Let's make it 7,500 days. It doesn't take long to load it. Okay, and now let's change it so it is more aesthetically appealing to your eyes on the screen, to my eyes. Thank you. Okay. Okay. All right. Now let's go ahead and put those level ones in again. And let's change this a little bit to planets, aspects, edit. Put the style here for 2. Put the symbol, the solid arrow, so we can see it. Okay. Interesting, the highest price so far in gold in the last 6-7 years was right on a level 1 day. That was what, Wednesday? Gold got to 386 an ounce in June contract. Okay. And you can see when we started that big move up from this bottom back here in October, we had 3 level 1s, all of them within 3 days of the bottom that you see before that big move up began. You see where my cursor is here? Okay. And that's the biggest cluster we had prior to this time was right at that bottom. We had four level 1s. And by the way, for a cluster, you need to have 2 planets, at least 2 planets involved that are no more than 6 calendar days apart. Okay? A cluster must be at least 2 planets that are no more than 6 trading days apart. And you can have consecutive occurrences of aspects as long as there's no more than 6 not trading calendar days, no more than 6 calendar days apart. And if you have several that follow each other within 6 days or less each, then you get a big cluster. So here we have level 1s only. We have 1, 2, 3, 4 level 1s where there's no more than four trading days anyway. I don't know about calendar days, no more than 4 trading days. And the middle would give you within 3 days where the actual bottom occurred. That's exactly how it should work. And as you see, we got a big cluster coming up here too. If that was the top, then maybe we get a bottom down here, or we haven't seen the top yet. We might get a top yet somewhere between all of these level 1s. Okay, let's next go to level 2s. Okay, let's put on the level 2s, which are the next strongest. And they're in red. Now let's make them a little bit stronger too. Let's go to planets, aspects, level 2, edit. The color's fine. The thickness, need a little thicker. And the symbol is fine. Okay? Now it gets real busy because, of course, there's a lot more signatures that correlate with level 2 than level 1. Well, you get this first clause. You see a bunch of level 2s and 1s way down at this first bottom back in August. You get 1, 2, 3, 4 that occur within 6 trading days. So there's a cluster, and that correlates the lowest price you see on the whole chart. And again, 1, 2, 3. Well, it's 4 days. That was a little bit out. You might have missed this one by a day. The level 1 is, actually, if you bought around the level 1, you didn't do too bad. But the cluster, let's see, 1, 2, 3, 4, 5, 6. So the cluster would be right where this date is. And there is a level 1 within 3 days, and the actual low occurred within 1 day. So that is a hit. That's a hit by this technique. Okay, you get another cluster here at this secondary low. In fact, you get a lot of level 1s with it, and that one timed up pretty good that low. And really, we haven't, well, we get a cluster here and didn't do too much. You got a little pullback here. You got a temporary top and a little pullback. It wasn't a significant reversal there. The bigger ones are what's going to happen right around here. This is where the real activity is taking place in February. Okay. And you could put level 3 in there. I usually don't like to put level 3 in because it just makes it too busy. But we'll put it in there just so you can see it anyway. Let's go here and highlight this. Aspects. Edit. I want to change the color. It's too dark. Let's make it light blue. Style. Make it thickness 2 again. Again, let's go with the circle, solid. Well, there aren't that many level 3s. But mainly I'm starting with level 1s to get my picture. And then I'm adding the level 2s to see if I get a cluster that's very identifiable. You can add level 3s if you wish. Okay, any question on gold level 1, level 2, level 3s? It's very simple. It's all the basis of research already done for you. It doesn't require any calculations by you at this point. It's visual.
So we know something's going to happen next week, so how do you, what's going to do? Is it go up or is it going to go down?
Well, you have to wait till you get there. When you get into this, you're looking for something that you think has potential to be a 3-week or greater top or bottom. So if you're coming down as the lowest price in 3 weeks, means lower than this price, you're going to be a buyer. If it's going up to retest this high or higher, you're going to be a seller.
It's got to go the opposite of the way it's going.
Exactly. This is timing reversals. Okay?
So where you had the strong level 1 and level 2s, and basically you got more consolidation, that just tells you it's a strong and trending market. You would expect it to continue out. Like I'm looking at around the beginning of January.
Beginning of January, you got a few level 2s, but there's no. Here you had a bunch of activity. There's really no level 1s in here. There's no level 1s from early January until early February. So with the lack of level 1s, it tells you you're basically in a trending market. You're going up and down, but with a trend. You don't really break the trend in a primary cycle sense until you get level 1s. Okay? Then you can look for the primary top, which means that the highest price within the 15 to 18 week cycle, or the lowest price within the 15 to 18 week cycle, a 15 to 21 week cycle. Tom?
I guess my question is sort of similar to his. I mean, when you're looking at that a few days in the future there, I mean, you proved your own satisfaction that something important is going to happen in that little period of time there. What are the mechanics in your mind where you're saying to yourself, what are the chances of going up versus the chance of going down? How do you...
Well, I use, the background for all this is, that I'm using is a combination of cycles and technical indicator. Okay? I'll try to be brief with this. The primary cycle is about 15 to 21 weeks. Okay? In a bull market, well, let me back up. You've got 15 to 21 week primary cycle. It consists of 2 or 3 phases. Okay? And each of them lasts 5 to 7 weeks. If there's 2, it's going to be more like 7 to 11 weeks. In a bull market, the top is going to be in the last phase, probably in the last phase or the last part of the second phase. Okay? In a bear market, the top's going to be in the first phase. Okay? So I've been up. The primary cycle started way back here in October. It's an old cycle. It's due for a top. It's already, you can see phase 1 was here, phase 2 goes to here. You're already in phase 3. In fact, you're well into phase 3. A top is due. So I'm looking for a top. If it didn't form here, I'm looking for it here. If it did form here, then what happens is, when you're in the last phase of a bull market, the decline is going to, in the last phase, the decline is going to be the sharpest of the whole move. It's going to correct the whole thing. From this bottom to whatever the top is, it's going to correct it, something like 50%. And it's going to last 2 to 5 weeks.
Now, what you're saying reminds me a little of like Elliott wave analysis.
You can use the Elliott wave too, yeah.
But
It's
on
like,
the other hand, I mean, looking at the geopolitical situation, there's some sort of crux happening there. Would you also be thinking, well, it depends on
yes.
what Bush is doing?
Yes, I would be thinking a lot of if there's a a well-known and understood fundamental factor that's due. Yeah, like a war. Yeah, and I would definitely think, what effect is the war going to have? And yes, I'm looking at this period thinking, this is when the first shots may be fired. And I think once that first shot is fired, the cycle's so low that that's when I want to sell gold. That's when I want to sell. I think there'll be a sharp 5-week drop after that. It's due. It may already start. Maybe it may have been last week, could have been the high. You had a level 1 there. But if so, you could have a, well, I'm more inclined to think that you're going to have a secondary high, if not a new high, around this time. And it's because of the fundamental situation, the type of aspects going on, and the fact that I'm late in my cycle. I'd also want to look at the techno picture. You know, if I'm looking for a top or bottom, I want to see if I'm in an overbought or oversold momentum oscillator relationship. And I happen to use stochastics with that, which this program will measure too.
When you say 2 or 3 phases, you're talking about how many times that person is trying?
Yeah, in a 15 to 21 week cycle, you're going to have 3 5 to 7 week phases, okay? Which means you go up and come down to 5 to 7 weeks. That's phase 1. You go up higher if it's a bull market in phase 2 and come down 5 to 7 weeks after that first low. That's the end of phase 2. The cycles are measured from bottom to bottom, okay? So he mentioned the Elliott wave, for instance. You could view it as a 1 up, 2 down, 3 up, 4 down, 5 up in a bull market. But in a bear market, it might only be 2 cycles. You go A up, B down, C up, and then you come down in 5 waves. Yes?
All those level 1 reversal
They just move probably sideways for a while at that high level.
You know, that's hard to say. I kind of think it might. That it might, you might come down here, you might have a $15 trading range from 386 to 370, maybe 365. So you might, see, these could be double tops as well as new tops. They might be slightly lower or slightly higher. Or they can be a spike top. You don't know till you get there. If it's within 1.5% of a previous top, you know, real close to it, that's good enough to me. I'll still consider it a hit if it turns. Even if it is $1 less than the previous high, it's still a turn point for me. So double tops is, in fact, that's a common pattern. Not so much in gold, but certainly in stocks. You see double tops and double bottoms at primary cycles. I think volume 1 of the stock market timing book analyzed that, and it was like 77% of the time they have double tops or double bottoms within 1 to 3 weeks, 1 to 6 weeks of each other. You get a double top or double bottom for a primary cycle. It's a very common chart pattern with stock indexes. Not quite so common with gold and commodities. They're more spikes. Okay, let's do the stock market one now. Let's go to MA Studies. Well, first of all, let's get out of gold, and you just simply click the X button here. And let's go to chart, and let's pull up the Dow Jones Industrials. Indexes, DJIA, here we are. Let's see here. Let's get out of that chart. Whoa. Okay, we're going to load, let's say 60 years of data. Let's put in 12,000 days. How many of you trade stock indexes, whether futures or exchange-related funds? Okay, it'll take a second to load that 12,000 days. All right, now let's go to MA Studies. Let's go to stock reversals. Let's do level 1s. Uh-oh. Maybe put in too much days? Oh, okay. We gotta load the whole thing up now. What was that, Tim? If it said runtime error, does that mean I asked it for more days than I had in there? No? My key? Uh-oh. This program not closed properly. Yes? Put yes here, Carlos? No, it worked. I haven't done anything with it. It seems like it worked fine before. Let's try it again. That's gold, so let's get out of gold. That's the Dow, that's what I want. Okay, so let's put 10,000. Put 12,000? Even with runtime error? All right, let's try it again. Is it the ephemeris? Maybe I don't have the ephemeris updated? Okay, well, it seems to work okay now. All right. It's working. I already did. 12,000's in there. What do you want me to do?
Level ones.
Level ones. Okay, let's try level ones. Here we go. Let's get to MMA. Planets. Open MMA window. MMA studies. Stock reversals. Level one. Okay, this word it crashed. Let's see. Huh. Okay. Yeah. Yeah, it was working fine when I left. Take setting that up. Sometimes if I put in less data, it works better. Let me try with 10,000. See what happens. I'm going to say no this time. Chart. Okay, let's try it again. Okay. Okay. Let's try 10,000, see what happens. Okay, let's try it now with level one. Stock reversals. Something between 10 and 12,000 days it didn't like. It could be, yeah. Okay. All right, so here we have the level ones, and it's pretty impressive here with the lows and highs. You see the low we had back in July. There were two level ones, and one of them was only 1 day removed, the other was 3 days removed. At the top we had in August, which we've not seen that high since, we had two level ones surrounding, one before and 1 day after, that high. At the very low on October 10th, we had a level one. In fact, we had three level ones back to back on 10th, 11th, and 12th. And we got the low, we haven't seen that low since then. This double top we had up here on December 2nd doesn't show so much with a level one. But look at what's happening now as we're coming in this low, as the market's coming down. We've got a lot of level ones here, and we're making new lows. And it is about 15 to 21 weeks in this low in October. So this is very clearly, to us anyway, to me anyway, pointing to a buying opportunity coming up here by February 22nd. Okay?
You've also got, you pointed at the high there, which is around back in August.
Yeah, this one.
Two.
Yep.
You've also got a couple other points here where you've got two, that's about...
Here?
Go move over to November in the middle there, and it is not really doing right there.
Right in here?
Yeah, a little confusing, and then move over to middle of December, you got three close to
This one I think is significant. This one here is significant. I mean, right in here you get this low, you have this correction low, and up here you got this little trading cycle high. So there is something to be said about this one. This one here, yeah, that pretty much is a non-event for the stock market there in middle December. I would attribute that simply the fact you're in the holiday market. I do not find that these work real well when you get into holiday markets. And between about December 20th to January 3rd, I don't trust any signatures. I just think it's more of a seasonality thing. Although it's strange because usually you'd expect a high going into that period as opposed to low from the seasonality. But this is impressive coming up here, and you can see we are moving down, so we're looking for some kind of a low to form here. This part didn't do too much. I kind of thought that would be significant. You only got a congestion. It just held. But now we're breaking that congestion zone, which tells me we're trying to make a low coming in here in the next 2 weeks. If we add the level 2s to it, and let's go into aspects. Let's highlight both of these. Whoops. And edit them and just make them a little bit bigger here. Thickness 2. See if that makes it a little clearer. Yeah. So you can see the level 1s of stock are really accurate. I think they're very, very useful here. Level 2s, they didn't measure quite so much. They did catch this bottom, this little bottom we had in December 31st. But it's the level 1s that are the real telling point here. Okay. Fran?
Since it's in the Galactic Trader program, if we wanted to add other planetary aspects to
Yeah.
the Galactic Trader, we could do that on
Yes, you can. Yeah, you can add those on the screen. Mm-hmm. Yep, very easy to do. Let's say you want go into planets here, aspects. You can pick any one of these things that Jeannie's already programmed into here. There's a lot of things you can program. Maybe you want to put angle between planets, and let's pick out what those geocentric angle value. Let's make an angle multiple of 90. Style thickness, symbol, circle 2, and pick your planets. Maybe you want to put a Mercury, Mars, okay, which I don't use for the stock market. Let's add that in there and see what happens. Well, there are none. Oh, that's because.
Mercury Mars squares?
Yeah, yeah. I mean, what I need to do is I need to change that from. Let's see here. I want multiples, not just 90. Let's try that. And I got geo. Let's see if this makes a difference. We might get 1 or 2 here now. Yeah, now you. Well, that's interesting. That low you got in July was a Mercury Mars going on as well. That's the only aspect we've had of Mercury square Mars in a multiple of 9 degrees. Mm-hmm. Yes?
Is there a way of going backwards where you can pick one of those lows and see what happened on that day?
Yeah. Yeah, you could do that. Let's take this low here. For instance, this is going to come up and it's going to tell you let's load these in here first of all under aspects, and let's put all the planets except Mercury. See if that shows. Okay, Venus retrograde. Okay, let's say we now want to see what happened in the past under Venus retrograde. You go to Jeannie's program here, planets, aspects, going retrograde, and let's put Venus in here. Make sure it reads Venus. Let's change the color of that. Let's make it, make it this yellow color. And let's go to style, make it thickness 3, really bring it out. Make it a circle again. And we want it to be Venus. And now, you can scroll back in time. Whoops. It only happens like every 18 months. So let's go to the last time Venus went retrograde 18 months ago. October, be about April. Yeah, it got your low, but that's because it's already a green signature. He wants to see what happened in the past with that same signature. So it's going to be both green and yellow again. Let's see, the last time would have been what, around May of?
March 2001 is what.
Okay, March 2001.
Yeah, it's right at the top there.
Right at the top, okay. So it's kind of like a double top. You got a rally and then big drop from there, right on the date. Mm-hmm. And the time before that would be about September of 99, approximately September of 99. Here it is over here. It's the late July. So it's right as this bottoming process is taking place in late July, early August of 99. Okay. And what you'll find from the studies in Stock Market Timing Volume 3, Venus retrograde, Venus direct is one of the strongest correlation of primary cycles. Within an orb of 12 days, I think it has a really high correlation. If you give it something like 7 or 8 days, it's still very high. It doesn't always happen exactly on the date. But as you can see here, it's part of a cluster. You have, if you start the cluster back here 2, 3, 4 days before it happened and take it right here to, I don't know what day that is. I'd have to, well, let's see, figure out what day that is. October 11th or August 11th. So you have a cluster from this day, which is July 26th to August 11th. You have a cluster of 1, 2, 3, 4, 5, 6, 7. And the midpoint, July 26th to August 11th, would be about August 3rd and August 1. So right around here, you're close. I mean, if you're going to risk 100 points in the Dow, you did fine. You know, if you bought it on the 3rd on the critical reversal date and gave it a 100-point orb, 100-point stop, you didn't get stopped out before you got this big move. And that's the risk I like to allow on the diamonds, 100 points. Okay? Okay, any question up to here on levels 1, 2, and 3? Okay. What I think I'll do, I'm going to take about a 5-minute break so you can digest this, and I'm going to set up to go to the next part of the program in this demonstration. So let's take a 5-minute break, and we'll come back. You ready, Tim? 1. Okay, we'll resume now with the next section on the Fire for the Galactic Trader program. We ended with gold in stock reversals, level 1s, 2, and 3s. Now let's quickly go through the next 3 or 4 sections here. And the next one is called MMA ingress, which is simply ingresses. And that is a astrological concept that identifies when a planet moves into a new sign. You know, as the planets transit around the Earth, as they orbit around the Earth, they do so against the background of the zodiac constellations. So as seen from Earth, there will be points where it moves from one constellation to another constellation to another constellation. The idea is that when they change signs or ingress, there's a change in investor psychology. These are not as significant of indicators for reversals in the market as the other things we've talked about so far. Level 1, 2, or 3 are much more significant as far as timing major reversals. But you'll tend to see trends occur when different planets go through different signs. And the trend may actually start at the beginning of that change, or it may take an aspect to that planet within that new sign to trigger the change. or maybe at the middle of it. Usually it's somewhere in the beginning when it moves into a new sign that you get the trend indicated. Well, MMA ingress will give you all the planets changing signs, not just each one. If you want each one individually, like Venus changing signs or Mercury changes signs, you go into Jeannie's program, the Galactic Trader, under planets and set it up for Venus ingresses or Mars ingresses. MMA ingress just identifies any planet changing signs. So if I click it, we now get a listing, we now get a visual representation with the white squares here of planets changing signs. Let me edit that so it's a little bit clearer for you. Let's make them a little bit bigger. Let's make the style thickness 2 so we can see it a little clearer. Does that show up okay on the screen for you? Okay. And you'll see it has a fair correlation to reversals. For instance, we get this bottom here in late December of, where am I here? I'm not, let's go more current. Well, this is late December of 2000. We got a bottom. It goes up to the top here and gets within 1 day of a top. You get a cluster of ingresses happening here at this top in early February. A little bit later, you get ingresses, but it didn't do too much. And it didn't quite nail the bottom here. And like I say, it's not that great at nailing the exact top or bottom in most cases, but sometimes it does, like this top here in May. It got the top there as some ingress happened, unless we can figure out what ingress that was. Options. Let's see if we can get ingresses here. Changing signs. Sun moved into Gemini that time. Okay. So Sun Gemini, that did correlate with the top. Now that's usually not that powerful a signature. There must have been something going on with level 1s and level 2s at the same time. Bring this to current times here. And this actually worked pretty good. Better than I would have expected. You got the bottoms here in July pretty close to a couple of ingresses. Let's just see what those ingresses were just for interest's sake. Sun moved into Leo, okay. I guess that was it. Sun and Leo. I thought it'd be more than that. Because it showed 2. I wonder what the other one was.
Can you put your level 1s on at the same time with the ingresses? Or?
Sure. You can put them on at the same time. I can go right into here, level 1s. Okay. That's kind of good. That's a real nice combination to use. I hadn't thought about that one. Eric, is it? You get an A. You pass. That's a good combination. Level 1s with ingresses look pretty interesting. I mean, you got the bottom here, and you got level 1s and ingresses going on. At this top, you got level 1s and ingresses. At this bottom, yeah, you got level 1s and ingresses going on there, too. At this top, mainly just ingresses. And, of course, we've got a bunch of ingress and level 1s coming up here. That was pretty good, Eric. You look about 80% there. That's good. Okay. Let's get rid of those now. Let's just delete all. Go in the next part of the study. We come to MMA silver. I'm not going to spend a lot of time on this. I'm mostly interested in where we had both, which means just reversal. And I need to have silver up there to make it more valid. So let's do that. Let's put silver up here. Get out of this. Go to File or Chart. And we want to go to Commodities now. Futures. Silver. So we're going to load the silver. We'll load, we'll just go the default, which is 1,000 days. I haven't looked at this lately, so let's see if it still works, because it was done from a study done from 1986 to 1992. Okay. Again, let me get a little more data in here. 108 days. And let's now go to silver. Let's go to the both. And let's change the the symbol for that. Edit. Color's okay. Thickness needs to change. And let's put this circle back up here. Okay. Interesting. It's saying we're getting the bottom in here right now. That could be significant if we're looking for gold and silver to make a high in the war zone of February 15th to 22nd. And we've got the indication here of reversal coming up with these aspects. You notice when we had 4 in a row back here, and it was with one day of the high. We had a 495, 494.50, 494.50. The exact high was just one day before this cluster of aspects that would indicate a big reversal. And there's nothing in between here, which is interesting. I wonder why it didn't get the bottom there. But it didn't. Let's go back to that again. In May silver, let's see if we put troughs in here too. Oops, same color, that won't help me. Well, it, of course, would be the same because if it's getting both and it gives troughs, it was showing they're both. Okay, so that's all it showed there for this. Apparently when the sun's in Libra, Scorpio, Capricorn, and even Aquarius, I don't get any big reversals for silver that show up. To go back and check that. But it does, if it is a valid indicator, and I don't, like I say, I don't rely a whole lot upon this part of the program, but if it is, it would say that we should be reversing here by Monday and getting a move back up again. Want to do ingresses with it? Okay. Let's go to MA Studies, ingresses. Oh yeah, there's the bottom right, the ingress, isn't it? Down here. And level, we could put the gold in here too, level 1, see what that does. Now let's highlight these a little bit. Go to Edit. Let's first of all get silver trough out. It's not what I meant to do. We can put them back in. Let's put them all back in here. MA Studies, let's put gold reversals, level 1. Let's put ingress. Were we doing ingresses? No, we were doing silver. Silver, both. And somebody else wanted ingresses too. Okay, now let's highlight all of these. Edit. And let's style it with this thickness of 2. Let's do the symbols with the circles and see what that does. It didn't do it, did it? Let's try it again. Aspects, edit, edit, style, 2, symbol, circle. I guess I got to do each one of these. Style, 2, symbol. I can leave that as a square. And level 1. Thickness, symbol, circle 2. Okay, let's see how that looks. A little better. 12-1. Yeah, well, the ingress got that bottom. That was a Mars going into Scorpio, which is one of the biggest indicators we have for silver and gold. Mars in Scorpio, you get a big move up. And that lasted right until January 17th here. So that got a big move up in there. Wow, a lot coming up, isn't it? A lot's coming up here. If this is a low, shown by the silver unique studies of sun and moon, then you can look for a top to come in here, I would guess. We should know after Monday's close what's happening. If we continue past Monday, then this was invalid, if we continue going down. But if we can get a rally in here starting no later than Monday, a low by Monday, either Friday or Monday, and then we should be getting some kind of top in between this February 15th to 22nd period. Okay, let's go to the next part. Um, we need to go back to the stock market here. Now we're going to use the NYSE studies. Let's get out of this and go into the Dow again. Now the NYSE studies, as I mentioned, is simply identifying dates that any transiting planet other than the moon makes an aspect to the New York Stock Exchange chart, which was born May 17, 1792. The thing I don't like so much about this part of the study, when it shows up on the graph, the visual, is that there are so many dates that are highlighted. But there's another part of the program that can limit that, and I'll show you that when we get to MMA research. But let's bring this part up here. The reason I'm saying that, when you see so many dates listed here, don't get discouraged. It doesn't mean you have to trade every day. There'll be another part of the program that will tell you which parts of that were in fact important. Well, actually, you didn't get that many days here, did you? There aren't that many aspects going on here. Oh, I see. I'm still stuck in silver, aren't I? Let's get silver out of there. Okay, now let's go to MMA Studies, NYSE, and you're probably going to get a lot of dates here. Huh, none? Let's try that one again. Oh, it's calculating the aspects. Okay. Edit that again. Make it stand out. Because there's 10,000 days in there, it takes a little bit of time to go and change the coloring of it. See, there's too many days by that. This part is useless. Okay, it's only useful in the sense that you know that some of these might be important, and you have to go into, not all of them, some of them are going to be important, and you have to go into MA research to find out which it is. You're going to find the same thing with the bond market. It's basically going to tell you the dates that there are aspects, Mercury, Venus, Mars, Sun, etc., to the Federal Reserve Board chart. It's got to calculate all these aspects now for 10,000 days, which goes back about 50 years. Okay, let's get out of the NYSE so you can see it. And again, this works more with the bonds and notes than it will with the stock market. Okay. So again, too many days. When you look at a horoscope and you're taking aspects of Mercury, Venus, Mars, Sun, it's going to happen a lot. You're going to get some major aspect. Okay, let's get out of that part. And I think we're about ready to get into the good stuff. Yeah. Okay, now we go to MA research, and this will help you identify which of those MMA bonds, MMA NYSE are more important. Okay, now we start using, we've got to start using our mind a little bit. We have, from here on out, we're going to be getting tools that do require a little bit of work to refine in order to apply in a manner that's going to make your trading more successful, or your analysis of timing more successful. From the MA research page, and let's see what chapter this is in the book. Chapter 9. Okay. Let's start by going to options on the bottom here. And you'll see you have options where you can pick any one of the studies we've done so far. You can pick the gold reversals, level 1, 2, or 3, the stock reversals, level 1, 2, or 3, ingresses, NYSE, T-bonds, or silver. So we'll start with the stock reversals, levels 1, 2, and 3, assuming we're going to look at the stock market. Now, if you hit month, you get a listing of all the level 1, 2s, or 3s. And the left-hand column gives you the date. So this would be February. Well, this shows you what month you're looking at, February of 2003. So you get February 2nd, 5th, 11th, 16th, 16th, 17th, 20, and 22. This is a section where you can identify a critical reversal date by, first of all, identifying is there a cluster. Remember, a cluster requires 2 or more signatures within 6 calendar days. And if you get consecutive ones that are no more than 6 days apart, you get a more powerful cluster. So for instance, let's look here from February 11th, the 16th, the 16th, the 17th, the 20th, and the 22nd. Okay, so from the 11th to the 22nd, we have 1, 2, 3, 4, 5, 6 signatures, and they're all level 1s. Okay? There's no more than 6 days apart between any of them. The way you determine a cluster like this, you take the first date and the last date, which is the 11th and 22nd, and you figure what is the midpoint. Okay? The midpoint is going to be February 16th to 17th. Okay? February 16th to 17th is our critical reversal date. This means within 3 trading days, the 16th or 17th, since the 16th is Sunday, we'll go with Monday. So February 17th is our reversal date. Within 3 trading days means anywhere from February 12th, which is coming up this week, through February 20th. From the 12th to 20th is within 3 days, trading days of the 17th. We look for a big reversal in the stock market. It tells you what the aspect is. So on the 11th, we get a Sun-Saturn, 240 degrees apart. What aspect is 240 from yesterday's class? It's a trine. It's what we call waning trine. If it's more than 180 degrees, it's waning. If it's less than 180 degrees, it's waxing. We get a Jupiter-Neptune on the 16th, 180 degrees opposition. That only happens every 14 years, approximately. It's an unusual aspect. That's a big one. That's a level 1. We get a Mars-Pluto conjunction, which is a level 1. That's the war aspect. Mars-Pluto, that's like force, forcing somebody or something, coercing them. We get a Sun-Uranus conjunction. That means there's a surprise element coming in. Uranus is surprise, unexpected. Maybe there's an earthquake at the same time. You get a Mars-Saturn opposition. That's another war aspect. Mars-Saturn. By the way, the Jupiter-Neptune is more of a betrayal aspect. Okay, you're having a war party, but nobody comes. You show up by yourself. Saturn direct the 22nd. Whenever you have a Saturn aspect, this is just off the side, I'm going to share it with you. When you have a Saturn aspect, Venus-Saturn, Mars-Saturn, Sun-Saturn, Saturn stationary, you can look at any market. If prices are going down into those Saturn aspects, that's a buying opportunity. Saturn by its nature depresses. So if there's a market that's price is depressed going into it, when Saturn lifts off, the price lifts up. So we've got a lot of Saturn going here 20th, 22nd. So any market going down is a buying candidate. Any market going up isn't necessarily a selling candidate. But a market going down is a buying candidate with Saturn aspects. Okay, under File, you can have it print this out for you by the month, or you can print it out by the year. I usually print out every year. This is the basis for my forecast book. I go to Galactic Trader in my research, print the year out for all my significant aspects, and I make my determinations of my forecast based upon that. Printer setup, I don't think, well, that's just printer setup. Under options here, I don't actually use that part of it. So I'm not going to go over what I don't use. So this is basically what I'm going through. I'm looking under options, deciding what I want to look at, and then I list it for the month. Let's go to the gold reversals. Level 1, 2, and 3. And you'll see they're a little bit different. Okay, here's your gold reversals. Not too different, though. It's just that instead of all these level 1s in gold, some of them are level 2s. It's still an important time because you got, of these 6 signatures, 3 are still level 1s, but 3 are level 2s. Okay? So they will show the same aspects, they just give it different values as far as level 1, 2, or 3. Go back to option. Now let's go to these other things we didn't spend much time on because it showed it too often. Let's go to ingresses. Okay, so during the year I have 3 ingresses. I got Venus going to Capricorn, Mercury in Aquarius, and Sun in Pisces. I am most interested in Venus aspects, Venus ingresses. In fact, of all the ingresses, Venus and Mars are probably the only 2 I use for trading purposes. And Venus is more important to me than Mars for trading purpose. So Venus went into Capricorn February 4th. And that tells me that the psychology changes. Venus in Sagittarius is a little bit more speculative. Venus in Capricorn is a little more worrisome. And here's where your astrology comes in. You've got to understand the nature of the signs. Capricorn is, again, like Saturn. It's depressive. It worries. So there's worry in the world right now about what's going to happen to the economies. When Venus goes into Aquarius, the worry will change. But that won't be this month. That will be next month. Let's go to March and see when Venus goes into Aquarius. I didn't change it here, did I? Got to change March here. And I got to give a date. Okay. Doesn't Venus go into, what am I missing here? When does Venus go into Aquarius? Doesn't show it. Did I not show the whole month? Oh, there we go. March 2nd. So between now and March 2nd, there's more worry than optimism. That makes sense. And after you get into Venus and Aquarius, it's a little bit stronger here. I think you get a little more lightness to the market, a little more lightness to the world. Not a whole lot, because you're going to see some Pluto coming in a week later, but nevertheless, Venus and Aquarius shows you're going to start moving out of it from March through the 27th, from March 2nd to 27th. Okay, let's go into other options now. Let's go out of ingress. Let's go to NYSE and show you what the important part of this is. You saw when we went into the earlier part of the program, put up MMA NYSE, it's like 50% of the days were highlighted, which didn't help you much. But now we can go to here and find out just which days are important. What are important are the ones that got asterisks or the sharp sign. Okay? And the reason these are important is because they make aspects to one of the 2 patterns in the New York Stock Exchange chart. In the New York Stock Exchange chart, you have a Jupiter, Neptune in Libra opposite Saturn in Aries, okay, between 23 and 27 degrees. Therefore, any planets that transit 23 to 27 degrees of cardinal signs will set off the stock market. Okay? So one of your patterns is 23 to 27 cardinal signs. Yeah. Yep. Can you put six? Yeah, you can go to the Galactic Trader and you can do that. You can go into indicators, I think it is, and you can put a stochastic in here.
In your list of aspects, you had these special have an asterisk next to it.
Oh.
Can you filter the ones that don't have?
No. Unfortunately, no, we don't have that. It's just, that's something we could probably have Carl look at, as if he doesn't have enough to do. That would help to just do the, under the NYSE. Yeah, that's a good point. Let me see if I understand you correctly. But I think what you're saying is we go to NYSE here, and we have it give a little arrow that gives you asterisks and the sharps and the all. And then you can have that show up on the screen. Good idea. You have something in Earth. Good idea. Mars, Virgo, Capricorn. That's a good, that's what I'd like to see. Good practical suggestion. Yeah, we can do that. It isn't on here now, but that's something that can be done easily, I'm sure, because it's already in here. Okay, also under MA research, we can go under options, and we can do T-bonds. And again, we can ask it to do the whole month. And just like the NYSE, there's 2 patterns in the Federal Reserve Board that stand out. One The pound sign deals with the Mercury opposition from 13 of Sagittarius to 13 of Gemini. In the Federal Reserve Board chart, Mercury is 13 of Sag, Saturn is 13 of Gemini. So anytime a transit hits that, it's a key. I do not find it as reliable as the next pattern I'm going to give you. A transit going on that has a sharper pound key here on that date, the bonds will make a change, but it won't last, generally speaking, more than 1 to 3 days. It's a very short-term change. The other pattern is the Sun at 1 degree of Capricorn, Pluto at 0 of Cancer. The Sun-Pluto opposition, Federal Reserve Board. That's much more important because it's on a cardinal ingress, 0 cardinal signs. Every time a transit goes into cardinal signs, it seems to have a more profound impact upon bonds, T-notes, more indirectly to currency prices. And let's see if we see those coming up from February 11th to 22nd. We do. On the 18th and 20th, we see the T-bonds. The Sun must be moving into Pisces at that time because it's trining Pluto and sextiling the Sun. The transiting Sun's not my favorite transit for this. My favorite transit, again, is Mars. When Mars goes over 0 cardinal signs, it seems to have a very powerful effect, correlation to a shift in T-bond and T-note prices. Solar planets like Jupiter and Saturn is going to go into Cancer 4th, and it will conjunct the Reserve Board Pluto and oppose the Federal Reserve Board Sun. Okay? So in June, when Saturn let's just pull up here so you can see when that's happening. Okay. It should be around June. Here we are. Saturn to Pluto, conjunction, June 4th. And it's going to oppose the Sun, June 12th. That whole period, June 4th to 12th, is when I think you'll see a shift in Federal Reserve Board policy. Saturn is tightening, Jupiter's accommodating. Okay? Well, and look, you get Jupiter and Mercury at the same time. Wow. You got a battle going on in the Federal Reserve Board. Half want to raise interest rate and half want to reduce interest rates. The segment that wants to reduce it and keep it soft is Jupiter trine Mercury. But you got the Saturn people are probably going to win. Saturn's stronger than Jupiter in this case, I think. So I think you'll start seeing a shift in policy toward strengthening or tightening interest rates. You can then do the silver the same way. And now you get the date when we get lows, highs, or both showing up from the studies. Today's 7th. So it did show the 7th. 8th. Yeah. So we got a reversal. It had a crest too. But we got both. It could be a low or a high here, the 7th or 8th. I'm in February. Oh, I'm in June. Wrong month. Let's go back again. No wonder it's giving signals here. Okay, so we had market went down into the 7th, and we got showing there. So we're going to start up on the 10th. Nothing more than the 10th. We got no crest. We don't look for a crest. In fact, we might find a bottom here on the 10th or 11th. There's no top forming, so we're looking for a bottom form here early, probably Monday, I would guess. And then now this is a short-term trade. If you get a bottom here on Monday or Tuesday, you want to get out on the 13th or 14th. So you're looking for a bottom here Monday or Tuesday and a top your Friday. Nice short-term trade. No, I'm talking about silver. Yeah, silver. So this is saying a bottom is due here, and you know, hold it. It's a trade. Buy it on a Monday or Tuesday. Be out Thursday, and you're looking for 3% move minimum. These are based on 3% moves. So what, about 460, 470, so for 13, 14 cents at least. And that's worth it. I mean, $50 a penny, that's $600-700.
Where do they apply to silver stocks too, or is it just silver?
I don't know. I don't know. It's based on silver futures. You could do a study, easily, as I'm going to show you how to do, using silver stocks and go to our filtered waves. I mean, this is simply the filtered wave part of the program, taking the results of it and making it a fixed system for you. Everything I'm giving now is fixed. Okay, there's no research you need to do. It's already done here. But if you want to do your research, that's what we're going to get into next. And that's where it becomes very fun. Okay. Any questions up to here on the mindless stuff, basically, the simple stuff? It take a whole lot up until now to make this part of the program work. Okay, let's get into what I think is the most exciting part, which is filtered waves. This is my bread and butter. This is what I'm trading based on and analyzing based on the filtered waves. And I'm so grateful to Carlos to making this available. Before I met Carlos, I had all these programmers trying to figure it out, and they could never do it. They could never put it together with the astrology part. Carlos did it. I'm so happy because it works fine. Under filtered waves, filtered waves are drawing lines between highs and lows according to percentages that you command. Okay, so you're getting out all the bars in between that aren't top or the low. You're just getting a filtered wave from high to low, back and forth. It's going to move a certain percentage. So we go to filtered waves, we set our percentage. You can set your color you want and the value, the percent. I like a 4% move. To me, a 4% move is a healthy trade to take. I have a high probability in a 4% move, and I can do it within 1 to 4 days. That's to me, that's a short trader's fantasy come true. You can set it for 3% if you want, 2%, but for the stock market, I like to see a 4%. So we got it setting out 4%. Go back to that again, filtered waves, and now let's plot it. Draws the lines of all those 4% moves. The other thing that the right chart, the other reason I decided upon a 4% move is because I like to see a high and a low form every 3 weeks on average. And if you take 4% historically and go back and look at how often 4% moves occur, it will be about every 12, 13, 14 days, depending on what the sun sign is. Okay? So that's about every 2.5 weeks I get a 4% move from a high to a low. Sometimes, you can see on here that it lasts more than 3 or 4 weeks, sometimes 1 or 2 days. In fact, we have, from high we had the first day of January, we didn't get the end of a 4% move until the last day of January. We went from the beginning to the end of the month. And then we didn't get another 4% move until we got to this, that was in December. The 4% move was from late December through mid-January. And we haven't finished the 4%. We had a 4% rally since that top on this day, which is January 13th. Okay? Since January 13th, we haven't had a 4% rally. It's still going down. We're due. We're due. It's on average, you have it every 2.5 weeks, and it's been 3 going to 4 weeks. So we're due. Now, we do it, and we run the frequencies. We can ask it to do a study on all reversals. We can ask it to do a study on just the crests, or a study on just the trough. Let's do all. And before I do that, let me get out for a second, make sure I got a lot of data in here. I want to make sure I got 10,000 days. Okay. Let's go back again. So it's going to analyze all of these highs and lows for the last 10,000 days. And it's going to give me a number. It's going to tell me how many times each planet was in each sign. And you see it up here. Okay. The last one is January 13th. Okay, so if you add any one of these planets and signs together, the total number of instances that there were 4% reversals. So if you had 104, 286, make a calculator. 104, 286, 204, 9. Looks like it's going to be close to 1,000 days. 4, 6, about 900, approximately. 880? Okay. 884. And if you divide that into 12,000, you'll see that you get approximately, about once every 12 days, you get a 4% reversal. I'm just looking at Pluto here. It doesn't matter which row you count. It'll come out, they'll all come out the same. So 104 plus 86 plus 204 plus 290 tells me how many dates. I mean, that's how many times Pluto was involved, and if Pluto was involved, every other planet is involved in a sign. So how many days you have 4% or greater reversal. If I add all of the sun dates, I'll come up with the same number. Because it's just taking these dates and telling you how many times the sun was in each sign, the moon was in each sign, etc. Just for aesthetic view, you can double-click one of these, the sun, and it will give you a visual representation about, so you can kind of get an idea of which signs, which planets and which signs stood out. So you can see you get more reversals of 4% are happening from Virgo, Scorpio, Sun, which makes sense. That's basically August through October into November. That's the most volatile time of the year for the U.S. stock market. The softest time of the year makes sense is Capricorn, and that makes sense as far as numbers because there's fewer trade days in Capricorn because of holidays. But it's also, strangely enough, not too volatile in Gemini. June is not a time you get a lot of percent reversals compared to Scorpio, October, November. You can do the same thing with the moon. And you'll see, this is interesting, the moon in Aries and Libra, Aquarius, Aries, Leo, Libra, and Aquarius stand out as the most volatile moon signs. And what doesn't stand out is moon in Virgo. Well, Virgo likes things anyway, like trading ranges. Okay, we can get out of there and go into, let's go into Mars. Nice little bar chart, isn't it, itself? Little random chart. So, looking at this, it looks like Mars in Scorpio is real important. But is it really? Well, this is where you got to come to the other part of the study, the baseline study. Okay, if you look at Mars in Libra in Scorpio, who has a calculator? Deborah, you do? Okay, tell me the percentage of times you had 880 days? 884. Okay, what percent is 105 to 884? And, everybody mark this down a little bit because this is where you find the difference between quantity versus quality.
It's 11.8.
Okay, and then let's go into Scorpio, 1. You got 101 instances of Scorpio. That's what percentage? Yeah, divided by 84. Huh? 101 divided by 884. Well, 0.11, so 11%. 101 divided by 84, 11.4%. And the other one, Mars and Libra, 11.9%. Okay? Now, let's go into the baseline study. Let's get out of this one. Let's exit this. And this will take bit of time to calculate because it's going to look at every day. Run frequencies for the baseline. It's going to go for every day for the past 1,000 days and tell us how many times that, how many possibilities were there that Mars could have been in Libra or Scorpio. So this is, the other one showed you how many times Mars was in Libra when it correlated with 4% or greater reversal. It's going to tell how many days they were actually in signs. And we're going to have to add up big numbers here. We know it's going to be close to 10,000, the final number. Yeah, let's move this up here. Whoops, I didn't want to reach. What did I do? Oh, no, I switched to. What do I need to do? Is this the total here? Okay, so let's go back down here. Okay, so let's add up 2126 plus 3051 plus 2903 plus 7, which are the Pluto instances. And I get 9,950 days. Okay, that's my denominator. Now let's see how many times Mars was in Libra in Scorpio. Okay, 1037 divided by 9950. My percentage is 10.4%. So mark that down. In Scorpio, 934 divided by 9950. 9.4%. So it probably is somewhat significant here. So my baseline, let's go controlled study. How many times was Mars in Libra? What percentage? 11.9? Is that what I had, 11.9? I'm going to go to the board here now a second. Mars in Libra. We'll put the controlled study and then the baseline here. And we had 11.9%. And baseline gave me what? What percentage of the time was Mars in Libra? No. Let's see, it was 1037 divided by 9950. Yeah, 10.4. And Scorpio, I was what, 11.4? But Mars and Scorpio, the control was 11.4? 11.4. 4. Okay? That's the part, Carlos, that I want the program to be able to do for us here. I want to take the controlled study, 11.9%, which was the actual frequency of 4% reversal, and divide it by the 10.4, which is the baseline rate of frequency, and I get, this is called weighted value. I get a weighted value of 111.5. Okay, so anything above 100 means that it's occurring more than average. 100 would be average. And over here in the B group, my Scorpio is 11.4 divided by 9.4. I get a weighted value of 121.3. So what does this tell me? That even though my rate of frequency showed Mars in Libra occurred more frequently than Mars in Scorpio, that's because Mars was in Libra more times than Scorpio. And really, Mars in Scorpio is more significant than Mars in Libra because of the less amount of times it actually taken place. Okay, let's get out of this part. Okay, you with me so far?
Take us through how you got that value, that value of
Okay.
the 1.5.
Okay. When I did the MMA study, let's go back here again. filtered waves, run frequency. And I'm going to do all. Okay? Once again, this is going to show me the number of times that Mars was in Libra when a 4% or greater reversal occurred. And as you'll see here, Mars was in Libra 105 times. It was in Scorpio 101. So just looking at the number of times that Mars was in each sign, it looks like Mars in Libra is really important, more important than Mars in Scorpio. But if I take the percentage of times, which is 105, that Mars occurred in Libra, versus the number of times I had a 4% reversal, which was 884, I will find that the Mars in Libra, with a 4% reversal, occurred 11.9% of the times that Mars was in any sign. Okay? So 11.9% is the percentage of frequency of Mars and Libra correlating with a reversal of all the Mars signs. But that may not be important if it turns out that Mars was in Libra more days than it was in Scorpio. And to do that, we go to baseline. And baseline measures the number of days in our study here, which we already found out was 9,950 days. For 10,000, it has a few holidays in there. Okay? Yeah. Mm-hmm. Mars and Libra is in fall, so interestingly enough, Mars and Libra in fall correlates with volatility. Mars is angry in Libra. He wants to fight. I just picked at random. Yeah, I mean, I'll pick other ones. In fact, I should. The further away you get from the sun, the further you get away from Sun, Mercury, Venus, the more you're going to get these kinds of distortions. Like when you get into Saturn and it's very distorted. Because we don't have that many days in some of them.
That's very interesting. You have your two values, 11.9% and 10%. You end up with your weighted value of 1.5.
Oh, I see what you're saying. I take the control group, 11.9, divided by the expected value, the expected value. So, right, and then moving over 2 decimals, okay? And that will give me 11.5. It's actually about 1.115, but I like to give it in terms of hundreds. So I move the decimal over 2 points, okay? And so in this baseline study, I had 9,950 days, of which Mars was in Scorpio 934, and I just take that percentage to get the 9.4%. Or Mars in Libra, 1,037, divide that into 950, and I get 10.4%. So yeah, I take the percentages of actual occurrence, 4% reversals, divided by the percentage of occurrence in the what you'd expect, the expected value. And that gives me the weighted value score. Yeah. Yeah, because when I divided these two, I get a weighted value of 121, which means it's more significant than when I divided the two of Mars and Libra, which gave me 111. See? The higher the weighted value score, the more significant it is. And anything over 120 I consider important. Anything between 80 and 120 is in the average realm. When you get less than 80, it's important because it doesn't happen. When you get more than 120, it's important because it does happen. If you get something in the 150s, it's even better yet. Well, let's go into a study that involves a little more complication, a little more complexity. We're just going to filter waves again. What I'm going to lead you through now is basically how I did studies in the stock market timing volume 4, the sun moon. And I've done it with the stock market. When you get this program, you're going to want to do it in your favorite market, whatever you trade or your favorite stock. And as I did it, I had such a sense of excitement that became validated because before I told anybody, I could watch it work. I watched this work for, 18, 19 months before I shared this information in August of 2002 in Newport Beach. This is the second time I'm talking about it. But it's such a rush to find something like this and then watch it work in the future. So let me show you how I did this study and see if it can inspire you to do something similar. Because just look at the overview of what we did, all the planets and signs, and that's a nice macro view. It fails to answer the question, do markets move differently when you have the sun in each sign? We want to take it another now. We're just looking at the overall picture with the sun and all the planets, the sun, all the signs, Mercury, Venus, Moon, and all the signs. Let's break it down further now. Let's break it down into where now Aquarius. Let's break it down into just Aquarius. So if you click the number of the sun that correlates with the box of the sun in Aquarius, which is 59 on our screen, and then right-click it, and then hit break, will isolate times it was in Aquarius, and then give you the planetary breakdown that isolated. So we're going to see, we're going to come up here, there'll be nothing in the sun column, Aquarius 59, but all the other columns will have planets and numbers. Okay? So when the sun's in Aquarius, first of all, what do you know about Mercury going to be when the sun's in Aquarius? Yeah, one sign, no more than one sign away. And you see that here. 15 times was in Capricorn, 34 times in Aquarius, and 10 in Pisces. And at first you think, well, that's significant. Wow. So many times, well, Mercury in Aquarius and the sun's in Aquarius twice as many times. Not that significant. But Venus, what about Venus? Where's Venus going to be relative to the sun with signs? So you get Venus in Sag 4 times, Venus in Capricorn 20, Venus in Aquarius 15, Venus in Pisces 12, Venus in Aries 8. See anything significant there? Venus is in Capricorn more than Aquarius when the sun's in Aquarius when you get % reversal. Venus is a morning star. When the sun is in Aquarius, Venus, morning star is important. Okay? Not as an evening star as much. Okay? That's important. And this book will show you, and you can do it yourself with your own studies, but it'll show you sun's in each sign. Where does Venus and where does Mercury have to be to also make it more significant for a volatile period? But of course, my most interesting area is the moon. Where does the moon be when the sun is in these signs? Well, if we go to this section, just look at a video. Wow. When the sun's in Aquarius, what stands out? The moon in Capricorn. The moon in Capricorn really stands out. Libra's strong. Cancer is next. You got all cardinal signs there standing out. Why would the cardinal sign be important when the sun's in Aquarius? Maybe because the sun in Aquarius is fixed and doesn't like new things, which cardinal signs represent? I don't know. But it is interesting when the sun's in Aquarius, in the cardinal signs, especially Capricorn, drive it crazy. And especially moon in Capricorn. Capricorn and Aquarius, interesting combination anyway. They're kind of the opposite. Aquarius wants to go forward. Capricorn, no, let's go backwards. Let's review this again. You got a real push-pull between the new and the old going on when the moon's in Capricorn, sun's in Aquarius. Okay, now, yes, Linda?
I'm just thinking logically that that's not always true because Capricorn is the entrepreneur and Aquarius has a tendency to talk about being technical. They actually want to figure out the answer created. They've always got a clash between the
Of Aquarius in the signs of
Well.
academicians.
Well, this is what you're noticing. You get Aquarius and Capricorn, you're getting, it's a risk atmosphere. It's a very risky atmosphere. It's not as conservative as you normally expect.
It's a very calculated risk.
Yeah.
Which is good, actually.
Mm-hmm. Okay, so what I want to do here, first of all, I know there's 59 cases, okay, of, of the Sun in Aquarius. What I want to do is break down each of these into percentages. I want to see what percentage of the time the Moon is in Aries, Taurus, Gemini, when you got the Sun in Aquarius. Okay? And this is what Carlos and I are going to work on now. Okay? This will give me my percentage, my rate of frequency in terms of percentage for each moon sign. So instead of seeing 3, 2, I'll get a percentage number in here. So what I want you to do as an exercise is to calculate these percentages for me for each sign, because we're going to find out which one of these really are important. Okay? So you can see these numbers here. 3 over 59 is what percent? I want you to put this on a piece of paper for yourself. I'll put it on the board here. But work with a partner and calculate what percentage of the time was the moon in each sign while the sun was in Aquarius to produce a 4% reversal. And this is going to end up being the denominator to our baseline study, which is going to follow. And from that, we'll get a weighted value score. .08%. The moon in Taurus occurred 6.78% of the time. The moon in Gemini was 3.39%. Cancer, 8.47%. Leo, 6.78%. Same with Virgo, which had 4 instances, came out 6.78%. Libra, which had 7 instances, resulted in a percentage of 11.86. Moon in Scorpio, we had 5 cases for that in Sagittarius, which is 8.47% frequency each. And that big moon in Capricorn, 11 instances, gave us a percentage of a frequency of 8.64%. The moon in Aquarius, 8.47%, and Pisces, 6.78%. So these are the percentages of occurrences of the moon in each sign when the sun's in Aquarius for 4% reversals. Now, let's do the baseline study and compare them. So go back to this, MMA studies, baseline. We got to do 2 things now. We got to run the frequencies of everything for the last 50 years or so, which will take a minute. You'll see it starting to calculate up here where the hourglass is. And once we do this, we're then going to isolate the sun in Aquarius again. Okay? So we can see how many times the moon was in each sign when the sun was in Aquarius during this study. And then we'll compare the percentages to each other and get a weighted value score. And we know it's 9,950 instances total here, but that's not what's going to be important. What's going to be important is the number of instances the sun was in Aquarius. Okay, here they come. Okay, now we're going to put the cursor on the 816 instances of the sun in Aquarius, right mouse click, go to breakdown, and now it's going to count just those times the sun was in Aquarius. We want to do the same thing with the moon occurrences with the sun in Aquarius for the baseline study that we did for the 4% reversal study. Once again, you can see it calculating up here up to 1996 now, 97. Goes pretty fast. Okay, here it comes. Okay, so we'll see the moon was in Aries, 74 instances, so we want to divide that by 816. Yeah, 816 is your total number. That's your the total number of instances we're looking at. And of that 816, 74 times the moon was in Aries. So we're dividing 74 by 816. The moon in Taurus, 71, divide by 816. So go all the way across here, take all of these instances divided by 816 to get me a percentage of occurrences that it could have happened of a 4% reversal. Your computer doing it quick? Okay, I am going to give you the answers for this one. So we'll move right along here. Okay, so the baseline study showed that when the sun's in Aquarius, the moon is in Aries 9.07% of the time of the whole field that we examined. It was in Taurus 8.70, Gemini 8.21%, Cancer 7.84%, Leo 8.33%, Virgo 8.09%, Libra 8.58%, Scorpio 7.60%, Sagittarius 9.07%, Capricorn 7.84%, Aquarius 8.46%, and Pisces 8.21%. Okay? Everybody have that down? Okay, the next step is to figure out weighted value. And to do that, you take column 1 is your numerator, column 2 is your denominator, and just divide. And round it off to 100. It's going to be 3. You want it to go to between 0 on up. You want up to 3 points. And then the decimal that follows the 100, you can take the nearest tenth of a percent, nearest tenth. So for instance, 5.08 divided by 9.07 gives me what? 50 something.
I got 56.
56 point what?
696.
5606. So we just rounded off 56.1. So your weighted value of the moon in Aries is 56.1. So if you can do this for me all the way down and give me all of the weighted values, then I'll tell you what it means. You cold, Tom? You want a scarf and a hat? No. It is cold in here. You got them all? Okay, we've got them all here, so I'm going to have Fran give them to me, and I'm going to put them down here.
I got 77.9.
Okay, 77.9 for Taurus.
61.9.
61.9 for Gemini.
108.1.
108.1 for Cancer.
81.4.
81.4 for Leo.
83.8.
83.8 for Virgo.
138.3.
38.3 for Libra.
111.5.
111.5 for Scorpio.
93.4.
93.4 for Sag.
237.7.
There you go. 37.7 for Capricorn.
100.2 for Aquarius.
1.2 for Aquarius.
And
82.6 for Pisces. Okay. Those are the weighted values. Now, this is what's important. This is what's going to be important because anything over 100 means it occurs more frequently than expected. Anything less than 100 means it occurs less frequently than expected. The rule that I outlined for importance in Volume 4 of the stock market timing is if it was a value of over 120, it's worth considering. It's worth considering a trade if everything else is setting up right. If it's a value of over 150, it's extreme important. I call it extreme important. And if it's over 200, it's critical in importance. Okay? So 120 is worth considering, 150 is extreme, 200 is critical. And as you'll see, we have one combination here that reached the extreme, the critical level, and that was the moon in Capricorn and suns in Taurus. Nothing else reached critical, and we have how many that reach worth considering? One, moon in Scorpio at 138.3. So when the sun's in Aquarius, I'm primarily only interested in trading 2 periods of time here, when the moon's in Scorpio, and especially moon's in Capricorn. I'm looking for my trades. That's the only times I have to be looking to get in and probably don't have to worry about getting out. There's another technique I use for that. There's only 2 times I'm really going to trade here. Yeah, I'm going to, when the sun's in Aquarius, I'm only trading. I'm only looking to take trades when the moon is in, oh, I said Scorpio. It's not Scorpio. Libra. Yeah, I'm only looking to trade when the moon's in Libra and Capricorn. That's all that interests me when the sun's in Aquarius. It's the only 2 times that month that I have to worry about trading, looking for a trade. The rest of the time I can do other work than watch the screen. Huh? Are we, the moon's in Taurus right now. Yeah. Yeah, I'm not going to be trading, I won't be trading for a couple weeks because it's done. Yeah. Next time I trade probably the sun's in Pisces, I'll get other setups. I don't think the moon's going to go into Libra while the sun's in Aquarius yet. I think it's over. Now, I'm also, if I'm in a position, I'm also interested in knowing when I don't have to worry about getting out. I can stay with it and not worry too much. Anything under 83 is, worth considering, that you don't have to worry too much. Anything under 66.7, that's extreme important as far as non-volatility. Anything under 50 is critical. Critical in the sense that I really don't worry too much about getting out of position, when the moon's in a sign that has a value of under 50. And there are some instances you'll see in the book when it's actually 0. I don't worry at all at those days. I mean, there's not a whole lot to do. But the things that show up here, we got a lot of non-volatility going on here when the sun's in Aquarius, where there's no big reversals taking place. Let's see, the lowest percentage here is Aries. When the moon's in Aries, 56.1, that's almost critical. It's between extreme important non-volatility and critical non-volatility. Next is the moon in Gemini, 61.9. In fact, the first 3 signs are the least volatile of all. When the sun's in Aquarius, the moon in Aries, Taurus, or Gemini, you don't look for many changes. The market's just going to continue its movement. The probability of 4% move is very low. Yeah, excellent. You got a whole week there. There's 3 signs when it goes from Aries through Gemini. It's a good time to be putting on strangles, selling calls and selling puts, especially if this is happening near a options expiration date. I mean, that's got to be, that's a good, who came up with that? Was that Eric again? Yeah, Eric's going to get an A+. Yeah, and we're in that right now. We're in that right now, this week. Last week and this week. So the market's just, it doesn't mean it's going I shouldn't say you got to be okay. It doesn't mean it's going sideways. It just means you're not done. It's not going to make a lower high from which a 4% reversal line is still continuing. So since we're going down, we could still continue down, but it's not done going down, maybe. We got some sort of non-volatility here going on between Leo and Virgo, 81.4 and 83.8. That's borderline the worth considering level of non-volatility. In fact, you can go down here to Pisces, 82.6. You could actually go from Pisces all the way through Gemini. That's 4 signs. That's 9 days where you're not going to get a reversal. Yeah, I don't know. Come to think, I don't know that you really want to be selling you don't want to be putting on a strangle. If the market's going down, you want to sell calls because it's going to continue going down. It's not going to reverse and go up. That's the thing. So we could have sold calls here maybe when it went into Pisces, which was last week, Monday. We could sell calls last Monday, and we don't have to get out of them until early this week, Tuesday, Wednesday this week.
But just to make sure I understand, that the dates you're grabbing are the highs and the lows as defined by that 4% move.
Yes,
So that's
right. This is what it's telling me the percentage of, well, this is a weighted value relative to 100, which is the norm, of the probability of reversal happening. If it's a low number, the probabilities are low that you're going to get a reversal. It's going to continue in that direction or go sideways. Okay? When it's over 120, there's a higher probability you're going to get a lower high and it's going to reverse. And we only got 2 of those, Moon in Libra and Capricorn. So I'm looking to initiate a trade with the highs and trying to capture something here. Or I'm selling options, as Eric says, when I get a succession of moon signs that are lows. Mm-hmm. I hadn't thought about that. Darn, I wish I'd given this class before and talked to Eric. I could have put that chapter in the book. That's a great idea.
How are you correlating this to dates?
To dates? Well, when the sun is in Aquarius, which is from January 19th or 20th to February 20th, then I'm going to the ephemeris to find out when the moon is in these signs. The moon is going to be in each sign for 2 to 3 days. And at least 4 of these are going to cover a weekend. Okay? So I'm just going to my ephemeris or the forecast book. Good plug for forecast here. And I'm going into the back of the forecast book or the ephemeris to where I have an ephemeris. And right down here under daily aspect, under the moon phenomena in void of course, it tells me when the moon moves into each sign and how long it stays there for. Okay? And those are the dates that I'm correlating with this chart. Okay? Okay. Any question? Okay. We will take about a 10-minute break, maybe 15. We'll come back and work 45 minutes till 1 o'clock when we take a lunch break. And when we come back, I'll go over the next step of this program, which is the create your own research. Okay? Let's take about a 10, 15-minute break here. During the break, how do you use this? For what markets? How do I use it? You who are futures traders can use this to trade the Dow Jones futures. You can use it to trade the S&P futures, the NASDAQ futures. As I mentioned earlier, I trade what are known as these, they're rather new, they're the exchange index funds, closed-end funds. I think that's what they're called, index-related funds. You have 3 of them. You have the spiders, you have the QQQ, and you have the diamonds. Okay? The QQQ is like 1/5 of the NASDAQ comp. The spiders are some percentage of the S&P cash, and the diamonds are 1% value of the Dow Jones Industrial. They trade just like stocks. The diamonds, or DIAs, trade 1/100th of the Dow Jones approximately. If the Dow closed at 84.60, the diamond might be 84.60. And if you buy 100 shares, it's like $8,400.60, or $8,460. And every point the Dow moves, you get $1. If the Dow moves 100 points, you get $100. If the Dow moves 1,000 points, $1,000 for every 100 shares that you're buying. And it's liquid. That's what I like about it. You get in and out whenever you want during the day. And it does track the Dow. And so it's an exchange-related index fund. Exchange-related index closed-in fund, actually. and it trades on the Amex, and it has good volume. It's very liquid, which is why I like it, and it's not as risky to me as trading the futures. It's like trading a stock, you know. Of course, you don't get the heavy leverage with margin either that you get with the futures. I mean, you get a 50% margin. If you buy 100 shares at 50% margin, it's still going to cost you $4,500 or something. But, you know, it just fits my temperament more, where I don't have to watch the screen all the time. Well, you know, your commission is going to be based on where you are. I happen to trade with a large brokerage firm. I trade these index funds, and I have an arrangement with them where I pay something like 1/4% of my equity with them every quarter, and I can trade as much as I want for no commission. So I can trade 40, 30, 20, whatever times, you know, I want to trade in and out. There's no commission. It's just that 1/4% every quarter on my equity. And I try to keep my equity at their minimum. So I think their minimum is like 50,000, something like that. Any major firm can do that for you. I mean, I work at a Smith. I trade through a Smith Barney, but you could trade through Merrill Lynch, Payne Weber. I'm sure they all have these programs. The other thing that they have that I like, as opposed to the discount brokerage firms, is I can park my money in money market funds denominated in foreign currencies for no fee. And I've been recommending that for what, 5 or 6 months now, since our August seminar. You know, take your money market funds and put it in money markets based on other currencies so you can make the currency play. And although it only pays 1 or 2%, the currency difference is 10 or 15%. You know, it has been since early December. It's been up 10% or more. So that's worked out real well. Yeah, I put it in Australian. I didn't actually do Australian. I recommended Australians, but I put it in euros and Swiss. Mainly, I'd go into Swiss franc, but euros would be my next choice. And my next one will probably be a combination of Aussie dollars, maybe Canadian dollars. But I like Australian dollar, Swiss franc, euro dollar. Those are my top 3, and then Canadian dollar. And since I do not believe you're in an investment climate anymore, and I don't think you will be for another 7 to 17 years, you have to take an approach to either a trader or a saver. And so you want to protect your capital. And moving your money to a money market fund where maybe there's a currency play just makes a lot more sense to me than being in the dollar at, what does a dollar pay you now, 1 to 1.25% interest in money market? It's not much. CDs are 1.25% for 6 months or something. No, I want to get a currency play on it if I can. I have it over at, I trade through Smith Barney. And Smith Barney will put my cash I have sitting on the sideline into a foreign currency money market account for no charge. And I'll collect interest on it based on that, on money market interest, plus I get the currency exchange differential. I tried to figure out how to do that, and I thought I got to get in these funds. I got to go into mutual funds to do it, but no, it's much simpler than I thought if you go to the firms that do that for you. Let's see, was there any other announcements I need to make? If you are part of this seminar and either had the FAR Galactic Trader or are going to purchase a FAR for the Galactic Trader, you will receive the upgrade with the weighted value scores that Carlos and I will work on sometime in the next, 10, 12 weeks or so. So we have your name and address. We'll notify you when it's ready. And you just let Linda know that you were at this seminar and you want that upgrade.
That'll be included in the price.
Yeah, if you have it if you have that program by the time you leave here, you will get the upgrade when it's ready for no cost. Okay? You thank Carlos for that. Okay, let's go to the next part of the program, which I believe is going to be create your own research. Own research. When you go down to own research, you have 2 choices here. The first one is select bars. And that enables you to go through the chart and click on the dates that you think are important. And then it's going to dump the dates that you chose into a database and analyze it. So let's do that. Let's select the bars. Let's get rid of the, we already have on there, the filtered wave. Okay, let me go back to that again. Own research, select bars. Okay, let's just kind of go through it and pick out all the little squiggles that we think are important. Okay, there's one that looks important. Click that one. Click this low that was 2 days earlier. Let's click this high a couple days earlier. Let's click this low down here. Let's click this high. Let's click this low before it, this high before it. Maybe this low over here. Maybe this high here. This low. Go to the high back here on December 2nd. Click that. I'm just looking for anything that looks like an isolated high or low practically that might have been an interesting trade to do. So you see they're going to be much more frequent than my 4% moves. So down to here, over to here, way down to here. So it looks like I'm clicking something about every 4 or 5 days. But you may look at it and say, well, I don't want that many. I want to pick out different moves that maybe more than 4% that you just eyeball and think are important. I'm clicking a lot, so I have some data here to examine. Okay, that's enough. Now let's see if I did, in fact, do it right and didn't turn off. Let's go to run frequencies and see what happens here. Okay, so I picked 34 days there on that, of those 108 days that we just analyzed. So it's basically from Leo to Capricorn, so 5 months. 5, 6, 1, 2, 3, 4, 5, 7 months. And in those 7 months, of course, you're going to spend more time with it. You want to get a lot of data. This isn't enough to do anything meaningful here. But in the last 5 months, the things that stood out are the moon in Taurus, Leo, Scorpio, Sag, and Pisces. I don't get anything from it. Wasn't enough data. But, you really do need to do several years of data of spending your time doing that. That was the first part of the program I put together, was the click and dump part of it, until Carlos created the filtered waves, which made my job a lot easier. So instead of approximating where 4% waves are, I can get it actual now. So to me, this part of the program isn't that important, but you might find it interesting because maybe you want to pick the dates that you think are important and see if there's anything of significance to them. Okay, let's get out of that. And let's get into something that is important. And that will be volatility. This is the part for day traders. If there's any part of the program that will benefit day traders, that they will find valuable and useful, I think this is it. We first of all go into formula. And the formula is going to be your high minus your low is greater than what percent of what? The high, low, or close. Okay, I want to find big range days. Let's talk about the Dow, since I have the Dow up here. What's a big range day for the Dow? How many points does the Dow have to move for you to consider it a big range day? Don't tell me 600 points. I agree with you. 200. To me, 200 is a good range day. If it's moving 200 points a day, I could probably get 3 or 4 trades out of that in a day. And without having to worry that it's just going sideways. So 200-point days. And if we're trading at 8,000 approximately, what percentage is that? About 1.5, 2? Two 2.5%? Yeah, what is 200 points of 8,400? Yeah, 200 points of 8,400 is what? 2.5%? Okay. So let's try to do that. Let's make this 2.5%. 0.025. Okay? And let's make it 2.5% of the low that day as opposed to the high. Okay? I mean, you could do the close, but I want it to be 2.5% of the low so that in case it's 2.4, I still get it. Okay? So that's my formula. High minus low has to be greater than 2.5% of the value of the low for the days it's going to analyze. Okay, now let's go to MA studies, back to volatility, and run frequencies. Okay, and it's going to give me all the days in which the high minus the low was 2.5% or more of the value of the low that day. And the idea is these will be the dates that show up astrologically that will have a higher correspondence to volatility. And so it's analyzing a lot of data. Wow. Maybe we should have chosen a higher percentage. There's a lot of days here. Uh-huh. I mean, let's add these up. Well, we can find that out too. So I got 1,704 days out of 9,950, 17% of the time. So that's about every 5.5 days. How about we go with 300 points? We do that? Okay. Let's try 300 points over 8,400. What does that give me for percentage?
3.6.
Okay, let's try 3.5%. Let's change this to 3.5% for volatility. Okay, let's try that and see what we get now. I would have agreed with you 200 points. That'd be nice. But I guess it's not so big after all. Do I have enough data in here? Yeah, I guess so. Wow, what a difference. 3.5% is not so frequent. 312, 68, 64, 10. You know what this tells me just at a glance at this, looking at the Pluto here? When Pluto was in Virgo, it was only 10 days. When it moved 3.5%, when it was in Libra, 64 days, Scorpio, 68. But Pluto in Sagittarius, 312 days. We have really moved into more volatile times. Truly. And even looking at Neptune in Scorpio 9 times, Sagittarius 65, Capricorn 106. But since Aquarius, it's not even halfway through Aquarius. 274 days we've had 3.5% moves. And Uranus in Aquarius, my goodness. Look, Uranus in Capricorn wasn't very volatile compared to Uranus in Sag. But Uranus in Aquarius is extremely volatile. We live in very interesting times. Enjoy it while it's there if you're a day trader, because it's not going to last forever, according to this. Interesting. Okay, so let's see what sun signs have most volatile days. Pretty interesting. Is there an October effect? I'd say so. Libra and Scorpio are by far the most volatile, especially Libra. Sun in Libra, you have more big range days than any other sign. So first of all, you want to take your vacations from your real job when the sun's in Libra so you can trade full time then as a day trader. That's what this is telling me. You don't want to be a day trader when the sun's in Gemini. That's interesting too. Aries looks big. Scorpio looks big. Actually, it looks pretty good to be a day trader from Libra all the way, well, Libra, Scorpio, and Aries are the best times to be day traders. Okay? If you want to work 3 months of the year, those are 3 months to work in the market. Okay, let's see if any moon sign by just in general stands out without looking at the sun signs. Not really. Scorpio, Libra. That's kind of interesting. When the moon's in Libra and Scorpio, just as the sun's in Libra and Scorpio, are volatile times. See if any Venus signs stand out. Whoops, lost it. Let's go back here, volatility. I jumped out too quick. Okay, let's look at the... well, let's look at Mercury, see if anything stands out. It's probably going to be very similar to the Sun. Yeah. Libra, well, that's interesting. The Libra Sun was very big, but Mercury has to be in Libra or Scorpio. when the sun's in Libra, probably. So when the sun's in Libra, we're not so concerned about the moon in Virgo. We want it to be an evening star. We want Mercury to be an evening star, not a morning star, when the sun's in Libra for volatility. Let's look at Venus. Scorpio. Okay, interesting. So sun in Libra, Mercury in Libra of Scorpio, and Venus in Scorpio. You want Mercury and Venus both to be ahead of the sun, further than the zodiac and the sun, is what it's telling me by that. Let's take it in terms of, let's see, how do I exit this part of it? Did it again. Let's look at the sun and moon combinations here for this. Let's do it with the sun in Aquarius and the sun in Pisces to find out which days in the next 6 weeks are going to be volatile. How many of you are day traders, or do day trading, I should say? Do you? Yeah, a couple of you. Okay. This would be a very valuable part of the program for you. Figure out which days are worth trading. So let's put the sun in Aquarius, right mouse click it, break it down. Sun in Aquarius wasn't that volatile, apparently, for a lot of big range days. Okay. Well, you can see big range days stand out with the moon in Leo, it looks like, and Libra. In fact, Leo, Virgo, and Libra. That's going to be next week. That's going to be late this week. It's going to be Friday through next Wednesday. This Friday through next Wednesday or so, I think. Good time for day traders. It doesn't look like this week is that volatile. Nothing really stands out. But the moon goes into Leo. When does the moon go into Leo? Easy enough. Just look up the forecast 2003, February. Moon goes into Leo the 15th, and it will go out of Libra on the 21st. So the 15th to 20th. Well, that's very interesting because that's when all those heavy aspects are happening. Big range days. Sounds like war to me. Could be. So 15th to 20th, all during that time is good climate for a day trader.
Yeah, that's the full moon, right? Yeah, 17.
Jeez. Is that a market day or is it market close that day? But the Monday is a President's holiday? So, what a shame. We have the holiday on right in the middle of this volatility. But maybe that's why they plan. Maybe they don't want to affect the markets very much. Maybe want to wait till the markets close that week, then you got a 3-day weekend. I'm thinking for them. I shouldn't think out loud. It's dangerous. They'll never hire me in the CIA now. I told everybody. I got Mercury and Sag, too big of a mouth. Okay, so that's the best time. The 15th to 20th looks like the best time for day traders this month. Now let's go into Pisces. Let's do it again and do it with Pisces. Let's see what's coming up next month. No. We're going to find out what is volatile when the sun's in Pisces. I gave you the volatile days with sun in Aquarius, which goes to about February 18th or 19th. I get to the 20th, but we should be looking at Pisces for the 20th. So we're going to look at when the sun's in Pisces, what moon signs indicate volatility. So we do the breakdown of the sun in Pisces. Now there's 30 days of volatility. And we're looking for, 300 points. Okay, so let's see what stands out here with the sun in Pisces. Stands out is Taurus, Scorpio, and Aquarius. Okay? Actually, you do Taurus, Gemini, because I like them back to back like that, Libra, Scorpio, and then just Aquarius. So when the sun's in Pisces, let's see when the moon's in these signs for big range days possible. Of March? Okay. So Moon in Taurus, Gemini, I'm just going to confirm that. We got the 6th, well, it looks more like the 7th that actually is going to be, because the 6th is after the markets close. Okay, through the 7th through the 11th. And then Libra is the 18th, which is what you said, through the 23rd. And the Aquarius is coming up February 27th through March 1st. Okay, those are our big range days coming up with the Sun in Pisces, Moon in Aquarius. Okay. If you wanted to go further with this, you can. I mean, I'm just doing Sun-Moon combinations. But look at, we have all these aspects here forming between the planets too. You've got the conjunctions. Now, I wouldn't pay much attention to Venus and Mars, or Venus and Mercury, because they will be conjunct quite a bit. But look at Mars conjunct Pluto, big range days, and we got that coming up. That's coming up. That's big. Venus conjunct Neptune looks like it stands out here for a conjunction. Sextiles, well, this is an interesting one. Mercury sextile Pluto seems to correlate with big range days. Mars sextile Neptune. Okay. Squares, Mercury Pluto. Interesting. Huh. Trines, not much. Oppositions, Mars Jupiter stands out as big range days. Well, that would make sense. Okay? So these are some of the valuable things that this program can provide to you as a market timer. It won't tell you what price to go in. You need to look at your technicals and other factors. But it will tell you when you need to look at those other factors and busy yourself with paying attention to what the market's doing. I love this program because it helps me economize my time. I can program my schedule every month just what days I want to trade based upon this program, and which days I don't need to waste my time. I can work on other things. That allows me to do what my Gemini midheaven loves, which is many things at once. Okay, that concludes my part of the program now. If there's any questions you have, I'll be glad to answer them. Otherwise, tomorrow, I will cover things that I left out today, that I think about tonight, or that you tell me about during dinner or lunch. So we'll have a wrap-up of this tomorrow and go over this, some more of this again. So if you don't have questions right now, bring them with you tomorrow, and we'll go over them then. Yes, Fran?
I'm sorry, I can remember what the 816 days was, with the Sun in Aquarius. We had 59 days that corresponded with the 4% highest.
Oh, that's how many days the Sun was in Aquarius for the whole study.
But that was like out of the whole.
Yeah, of the whole control group. Yes, all training days the Sun was in Aquarius, that many. And out of those 816 days, 59 of them had a 4% reversal, which is your control group. Okay. All right, thank you. We'll have a break now. All right. Welcome back to the second day of the workshop on the FAR for the Galactic Trader software program. And what we're going to, what I want to do today is start out with a review, an exercise that helps us review these techniques. And during the break, one of our participants, Sanjay, had suggested that maybe we start with a new chart, something we haven't seen before, and go right from the beginning on how we would analyze trading opportunities from that particular company or that particular contract. And I think that's a good idea to run through an exercise with that type of format. So let's do that. Let's go to chart and pick a stock or a commodity. Would you rather do it, let me ask Sanjay, would you rather do it with a stock or a commodity?
How about a stock?
Okay, let's pick a stock. Let's see what we have here in our stocks. See if we have IBM. Is that a good one? Yes. Make sure we got an IBM here. Oh, I don't have that particular one on here. Let's see what I do.
How about something that's been, how about McDonald's?
McDonald's? All right, let's look at McDonald's.
Kmart's getting ready to close out, you might look at that.
No, we're not going to look at the astrology, because there's no there's no volatility in Kmart anymore. Between what, 10 cents and 13 cents? You have to deal in hundreds of thousands of shares to make it worth your while. I think McDonald's got a little beef to it, doesn't it? Too early? Sorry, folks. I have egg all over my face now. So let's put 108 in here. We're going to do McDonald's. Oh, I don't seem to have a whole lot of data in McDonald's. No, I need a couple years to make it work. Wow. Huh. I'm surprised I don't have more data there. Well, let's see what else we got. Yeah, there goes some chickens. All right, let's see what we got here that has some data to it. Merrill Lynch. Let's see if we got Merrill Lynch in here. Okay. So they got, let's see if I can get 3,000 days of data. And let's see if we can get more on the screen here. See if we can bring it to somewhere between 100 and 120. And let's just see how far back it goes. Yeah, we'll go back to 1995, November 6, 95. So that's about 7.5 years, a little over 7 years. So I get about 1,500 days of data in here. Okay. So let's go to planets. Open MMA window. Click on MMA studies. Okay. We're not going to apply any of these first 6 categories, or 7. Gold reversals, stock reversals, MMA ingress, silver, knife, bonds, or MMA research. We're going to go right into filtered waves. And let's see what looks like a pretty good swing. Would be from 49 to 55. I think we should go with 10% filtered waves. Let's go for 10% moves on McDonald. That's $5. Okay. So let's set our parameters to 10%. Okay. And now go back to filtered waves again, and we'll go to plot. We have a few of them. Go back to MMA studies, filtered waves, and hit run frequencies, and let's go to all. And see how many we get here of 10% moves in the last 7 years. Hopefully there's at least 50 or 60 of them. Whoa, wow, 166 10% moves in 7 years. That's a good company to trade. I never knew that. Merrill Lynch, you're on my trading block. That's a lot, 106. That's like over 20 times a year. That's like every 2.5 weeks it moves 10%. I had no idea. What have I been missing? All right. So let's first of all just look at the I'd like to look at the graphic representation by double-clicking the sun. This is any particular seasonality to it, where it tends to be more volatile than usual. And you can see, again, Virgo, Libra, and Scorpio, those 3 months, which is the same as the Dow, tend to be more volatile. So it seems if you're a trader, that you want to be trading between late August through late November. That's the best time of the year to trade. Virgo through Scorpio. That shows up over and over again, it seems. Pardon? You can take off probably between Taurus and Leo in this case. You can take off, that would be what, April through mid-August. Yeah, spring and early summer is a good time to take your vacation. And apparently they do. But it looks like the rest of the year you pretty much need to be working. Maybe you can take off something around Sagittarius and something around Aquarius. But for sure, late August through late November, volatile time to be trading it for 10% moves. Okay, let's see if there's anything that stands out here with just the moon sign, regardless of sun sign. Well, Virgo moon sure doesn't do a whole lot, does it? Virgo sun did, but not Virgo moon. You can look in here and see Leo and Aquarius. Now that's interesting, Leo and Aquarius, because they're opposite to each other. Okay, so we always think in terms of Leo and Aquarius, it might be a good time to be trading. Take a quick look at Mercury, see if it shows any relevance to that same Virgo, Libra, Scorpio. Wow, Mercury in Scorpio and Sagittarius. This kind of implies, again, Mercury is an evening star. Mercury ahead of the sun is what it implies. When you're in the sun in Virgo, Libra, Scorpio, when Mercury's in Scorpio and Sagittarius, which means ahead of the sun, it probably is more volatile. Let's look at Venus. And all I'm doing right now is just a general overview. What I'm going to move into is specifically what happens with each sun sign in a minute. Let's just see if Venus stands out here. Whew, Aries. Well, that is interesting because Aries didn't show up for the sun or Mercury, but here it's showing up with Venus.
Wasn't Pisces fairly strong for the sun?
Yes, Pisces and Aries were fairly strong, but it says if Venus is in Aries when the sun's around that time is very important. And Venus in Leo and Virgo. Now, the Leo and Virgo is a little bit ahead of the Virgo, Libra, Sag. So Mercury is an evening star, Venus is a morning star in that time of the year. So you like to see Venus and Mercury far apart from each other, apparently. We'll check that out when we get into the finer details of it in just a second. Let's do that. Let's say that we are in, well, we're going into Pisces. Let's look at Pisces. We only have 15 examples, but it might serve, it might be enough to give us an indication of what to look for. So let's break down Pisces, Sun in Pisces, and see where the moon signs stand. Well, let's first of all see where Mercury stands out. I'm guessing Venus will be in Aries a lot, more than expected. In fact, let's do that. Let's figure out weighted values for Mercury and Venus when the Sun is in Pisces. Okay? So I'm going to need your skills here again, Fran, with your calculator. So we have 15 cases of the Sun in Pisces. Mercury is going to be in what signs when the Sun's in Pisces? What only signs can it be in? When the Sun's in Pisces, where can Mercury only be? That's right. It can either be in Pisces or one sign before or one sign after. So Aquarius, Pisces, or Aries. Now, Aries is real easy to figure out. There's no cases. So when the Sun's in Pisces and Mercury's in Aries, no reversals of 10% for Merrill Lynch. However, 7 times it's an Aquarius. So what is 7 to 15? What percentage? 7 to 15? A little less than 50%. So we do Mercury in Aquarius. What's 7 divided by 15? Okay, so 46.7. Well, I want to take it to 2 decimal points, so 46.67. 46.67%. And in Pisces, be 8 over 15. Be the difference, probably 53.33. Should be. And Aries is 0%. Now let's do Venus, as long as we're up here too. So Venus will be in Capricorn, Aquarius, Pisces, Aries, or Taurus. And Venus is in Capricorn 0 times. Easy enough. 0. So when the sun's in Pisces and Mercury's in Aries or Venus in Capricorn, we're not looking for 10% moves during that time. Venus is in Aquarius 5 times.
Is that a 15?
Yep, out of 15. That's simple enough. That'll be 33.3. Venus is in Pisces. What is that, 2 times? Only 2 times. So what is 2 divided by 15? 13.33. Better put another one there. And, oh, I see, I've got my, let me change this a little bit. 13.33 in Pisces. And then let's go to Aries, which is 6 times in Aries. 40%? Okay. And in Taurus, we have 2 times, which is again the 13.33. Okay, now we want to compare that to the baseline study. Okay. So let's get out of here. Let's exit that. Go back to the MMA studies, baseline, run frequencies. So we got nearly, what do we say, 6, 7 years of data? Something like that. So we're going to have probably around 1,800. Well, there we are. 5 Pluto and Scorpio, 1,798 in Sag, so that would be 1,803 instances. So that's going to be the denominator of our percentages here. Whoops, I'm sorry. It won't be. It's going to be 104. We're going to do Sun in Pisces. So 142 is going to be our denominator. Let's break down the Sun in Pisces and get percentages of the same thing here. Mercury in Aquarius, Pisces, and Aries. And once again, like I said, the next upgraded version will have this already calculated for you. We'll have a weighted average component subdirectory here. Okay, so we got the Mercury in Aquarius 52 times. So 52 divided by 142. $36.62. Mm-hmm. And Pisces, Mercury in Pisces is 66 instances. By the way, if 4%, if the value under 4% is greater than the percentage under baseline, then you know it's above average. So right away we see Mercury in Aquarius is above average for volatility.
So it's
46.48, so that's also above average. And in Aries, we have 24 instances. Out of 142. Mm-hmm. 16.9. 16.9. Okay. Okay, now let's do Venus in Capricorn. We have only 8 instances. That might be one reason why it had 0 cases. There's only 8 possibilities. 5.63%. Okay, then Venus in Aquarius is 34 instances divided by 142. $23.94. Okay, in Pisces, Venus in Pisces, 32 instances Oh, now we see why Aries was so prominent, see? There's so many instances of it in this study. 22.54. Venus in Aries, we have 57 cases. 40.42? So that's not so prominent after all, the number of instances of Venus in Aries. Oh, because it was 40% in our controlled study, and then 40.14% in our random analysis here. Okay, Venus in Taurus, we have Taurus how many times? 11 times. 11 out of 142.
Okay, 7.75.
7.75. Okay. Now this gives us our percentages. The next step is to divide the 4% percentages by the baseline percentage to get a weighted value. So if you could divide 46.67 by 36.62. You can do this with a hand calculator, folks. If anybody's got one, it might be quicker even. You know, I've got it right here. So if you take 46.67 divided by 36.62, you get a weighted value of 127.4, which is strong. And if I take 53.33 divided by 46.48, I get a weighted value of 114.7. And of course, 0 divided by 16.9 is 0. So we can conclude by this that Mercury in Aquarius is more volatile, is volatile enough to be considered worth considering. Venus in Pisces is fairly volatile. It's not to 120, but it's close. It's near 115. But Venus in Aries is not a volatility feature. It's 0. And of course, Venus in Capricorn is going to be 0. Venus in Aquarius is 33.33 divided by 23.94. Weighted value 139.2. That's strong. Pisces, Venus in Pisces, 13.33 divided by 22.54. Gives me a weighted value of only 59.1. And Aries, 40% divided by 40.14. It's nearly 100, 99.7. So what we thought was going to be very important turns out not to be quite so important because it had more chances to be important. And finally, Venus in Taurus, which didn't look too important before, turns out to be very important. 13.33% divided by 7.75 gives me a total of 172. That's very strong. That's critically strong. So let me go back to the original thing we looked at and show you why why weighted values are so important. You can't just look at the quantitative disbursement here.
Ray,
Yeah.
can you back up one step there with that, the planets and signs?
The baseline?
Yeah, the baseline before you,
Let's go back to baseline.
when we had it displayed.
Yeah. Take a second here. There it comes. Okay.
Right-click on it again, and you were going to do the breakdown.
The Pisces, Sun and Pisces, right click.
Click on Show Percentages.
That's not, we got a little bit of a bug there. We're working that out. Actually, it might work out okay on this part of it.
Showing, that was my question.
Oh, it's going to show percentages. Actually, this part is going to be okay. This part's going to be okay, but if I did the breakdown and then show percentage, it's not set up right yet. This part's going to come out okay.
That was my question. Are these percentages going to be different than the ones we were just calculating?
No, these would be pretty, well, they'd be pretty close. They might be, oh, no, they're not close. These are different, okay. Yeah. They're all 100%.
Okay.
That was the baseline, yeah.
Yeah, well, that was basically, right.
That was, yeah, that's percentages under baseline we just did.
We would all be under it anyway.
I think if we went percentages under the other one, I think it does work when you do the totals.
I was getting it on mine under the other one, actually, and I was getting different percentages.
Let's try that.
I was just thinking it might save us a step with that hand calculator there.
Yeah, well, like I say, the thing we're working on now will save you that step, but we haven't got it perfected yet. You see it in process on here. But I think here, if I let's see, if I went right on here and did percentage, I think it's going to show me percentages here at this level. I think they're going to be accurate.
That's going to be the percentages in each sign.
Yes. Yeah, I think these are pretty accurate. The percentage of planet distribution in each sign. So instead of the bar chart, you could look at it this way too, and you could see that, again, Virgo, Libra are pretty high, 12.77, 12.75%, which is what it showed when we did the bar graph. And Pisces, well, you'd expect 8.33 is normal. That's the average distribution. So anything above 8.33% would be somewhat significant. So when you see Virgo and Libra up to 12.77%, you know, that shows us pretty volatile, maybe to the point of 150 on a weighted value score. But then if I, yes?
I was going to ask, shouldn't Pluto add up to 100%?
Yeah. Huh. We're still working on it. Yeah, all these should be up. All these should add up to 100% across here. Okay. So again, I didn't want to go too much into that because it's in a process. So let's go back here.
I just noticed that, and I didn't know if it was giving us something that would save us step.
Yeah, it's almost there. Okay, let's go back here to run frequencies of all. Okay, so again, you put the cursor on the sun sign you want to analyze. Click it once so it creates a box around it. Right-click to breakdown. Click breakdown. And again, just by looking at it, it would seem that Mercury in Aquarius and Pisces were pretty strong. We actually do a weighted value. We see Mercury in Aquarius is more important than Mercury in Pisces, even though Mercury in Pisces had more instances of occurrence. You look at the Venus, and Venus in Aquarius, Pisces. You have Venus in Aquarius 5 times, Venus in Aries 6 times, and you'd think, well, that would be important because it's not even in the sun sign of Pisces. But if you look at the weighted value breakdown, Venus in Aquarius was important at 139.2, but what is more important so far by this study is the only 2 instances of Venus in Taurus. But that's important because you only had, what, about 9 instances possible. So you get a weighted value score of Venus in Taurus of 172. So this thing which would not have caught your attention, this would not have caught your attention by looking at just going to this far in the study. You would not think Venus in Taurus was important when the sun's in Pisces. But when you do weighted value, it actually is the most important. And again, we've only got 15 cases, so this is subject to a little bit of skepticism. You'd really like to see about 20 years of data. I need more data, Merrill Lynch, to make this a more valid study.
The sun in Pisces, was that a random thing?
As a random pick because we're going to be going into it in a couple weeks. You know, we're February 9th today, so in 9 more days we go into the sun in Pisces, so I wanted to give you something that you can use pretty soon. The sun in Aquarius is almost over. So if we pick something in Aquarius and we found it relevant, you wouldn't be able to use it till next year. So you can use this year. By the way, where is Mercury when the sun goes into Pisces this year? Who's got an ephemeris? And if you don't have an ephemeris, you can look in the forecast book. The back of the forecast book has an ephemeris for 15 months.
Ray, you said 15 is too small sample. Basically, where you begin having confidence in the sample.
Oh, I'd like to see at least 40 instances.
Mercury's in Aquarius.
Mercury's in Aquarius, which we have determined is important. And how long is it in Aquarius for? From February 20th.
So March 5th.
February 20th to March 5th. Okay, great. So from February 20th to March 5th, I should see 1 or 2, maybe more, 10% reversals in, what is this, Merrill Lynch I'm looking at? Merrill Lynch. And where is Venus between February 20th and March 20th?
It starts out at 17 Capricorn.
17 Capricorn, and that's not so good for us. When's it go into Aquarius?
On March 3rd.
March 3rd. Okay. This is important because between March 3rd and March 5th, I hope that's not a Friday, Saturday, and Sunday. It could be.
March 3rd's a Monday.
Perfect. So March 3rd, 4th, and 5th, I want to look for the end and the beginning of a 10% move because I got all of it going on. I got the Sun in Pisces, Mercury in Aquarius, Venus in Aquarius. And Venus in Aquarius is important because over 120 weighted value. Mercury in Aquarius is important. It's over 120 weighted value. So that tells me the best time to trade Merrill Lynch for a 10% move is going to be March 3rd to 5th. Okay? And if I want to actually pick the date in there, where's the moon at that time? Because let's see if it stands out here in Aries. Okay, there's instances. There are 2 instances of Aries, and then probably goes into Taurus by Wednesday.
Actually, that's a little slow moon. Friday.
It doesn't go into Taurus till, that's too slow of a moon. From Monday to Friday to go from Aries to Taurus. That's a moon. Where is the moon on March 3rd?
March 3rd,
2003.
Oh, March 3rd.
Yeah.
Sorry, Pisces.
March 3rd is in Pisces. When does it go into Aries?
8:30 a.m. on the 4th.
Well, this doesn't really tell us it's going to be that significant. It's only got 1 instance out of 15, which is about normal. You got 12 signs, 15 instances. You'd expect 1 per sign on average. So again, we need more history, and I would say simply look at March. Don't worry about the moon here. It doesn't stand out one way or the other, but the Mercury and Venus stand out March 3rd to 5th. If we can get what looks to be like the end of a move, we want to go the opposite way.
Can you show where you click to get the graph again, please?
To get the graphic? Okay, click whatever planet you want. Let's say the moon. Hit it once so it lines up there. Oh, no, just double-click it. Just double-click it.
I got it.
Okay? So all you do is just double-click the symbol for the abbreviation for the planet. Let's look at, let's go something I got a little more data, which I think is the XAU index. Should we look at that? Go through that? Because I think if I can get 20 years data, it's going to be a little more relevant. So let's X out of here, and let's go find the XAU. There it is, XAU. 20, let's put about 4,000 days of data in here. I think I got to go back to early 1980s. Oh, I got 5,000. Okay, that's even better. Okay, I want to go into aspects and get rid of level 1s. Okay, let's see what looks like a pretty good move for the XAU, if it goes from 80 to 74, let's see, 6 divided by 74. Let's go for 8% moves in the XAU. That would give us about a 6-point move. That's a good trade, 6 points. Okay, so let us now go to, let's go to MA Studies, filtered waves, parameters. Let's set it for 8%. MA Studies, filtered waves, plot, run frequencies. Let's go with all and see how many reversals we get of 8% or more in the last 20 years approximately. Okay, we have one. I'm counting the number of instances on the Pluto line to see how many total instances of 8% moves I have during this period. And I get 308 instances. Okay. Again, let's go to Aquarius this time because we've got 31 instances. Break it down. Okay. Now, the 31 instances when the sun's in Aquarius, we have Mercury in Capricorn 10 times, Aquarius 16, 5 times in Pisces. We have Venus in Sag 2, Venus in Capricorn 14, Venus in Aquarius 5, Venus in Pisces 6, Venus in Aries 4 times. Okay. So at first glance, it would seem that Mercury in Aquarius with Sun in Aquarius, which is probably the most frequent position for it, is important. But it seems like Venus behind the Sun is important. Venus in Capricorn, Venus in Morning Star is important. And isn't Venus in Capricorn now? Yeah, Venus is in Capricorn now, isn't it? And it's going to be for the rest of the time that the Sun is in Aquarius. And let's see what stands out with the moon sign here. Just looking at the quantitative values, it looks like the moon in Capricorn is important. Where is the moon right now? Is it in Taurus or Gemini? It's in Gemini, isn't it now? So we're not coming into a volatile period early this week with the XAU. Not till we go into Leo. Well, what I would do now is do the percentages again of the moon. 2 divided by 31 because of Aries. 2 Taurus is divided by 31. Gemini 1/31. Cancer 1/31. Leo 3/31. And then I go to the baseline study to see what stands out here. I'm not going to go through that calculation right now again because it will take some time, but just in an eyeball's glance, it looks like the moon in Leo is important. When does the sun go into Pisces? On the 18th? And where's the moon that day? I want to see if we get as far as Scorpio. I don't think we do. Libra? On the 18th. So it looks like at the very end, the end of next week when the moon's in Leo, which day is that, Mike? When is the moon in Leo?
Leo?
Yep. Well, I want to do Leo first.
Leo first? Okay, so Leo, 14.
Till when? Oh, that's this Friday, so it's going to be that.
Friday, yeah.
So this Friday, and then it goes into Libra when?
Goes into Libra 18th at 11:47 p.m.
So it looks like this Friday and on the 18th will be our best opportunities to catch a top or a bottom for an 8% move coming up in the XAU, which means about a 6-point move. And possibly whatever you get on Friday of next week could be completed by the 18th, which is Wednesday of the week after, Tuesday or Wednesday of the week after. Okay, any question how to, Sanjay, did that kind of go through the example you wanted to see? Okay. Yes, Tom?
I'm just wondering, could you use a software program to give a better idea whether something's going up or down?
If the stock is going up or down?
anything.
Yeah. What we didn't do, and we could do, is instead of looking at all on the run frequency, we could look at crests or troughs, see which stands out as prominent for bottoms or tops. Yeah. Let's do the Dow because we need a lot of data for that. You really need about...
The only thing that bothers me is that, there's a lot of emphasis on the changes. But
Yes.
But the changes could be the opposite direction we can anticipate.
Well, I mean, this implies that you have to wait till you get to there. You can't anticipate what it's going to do going into it. You have to wait till you get there, and then you see, is it a high or low? Is it the highest or lowest price in the last 3 weeks is forming on that day of the change?
Right. No, I agree with you there. I'm just saying that the same sort of statistical analysis you use to determine the turning points could be used in time to figure out the probability of going up or down. It take time to analyze the statistics, but I mean, there's obviously, there's somewhere there's a body of statistics you can figure out whether it's more inclined to go up or down.
I don't know if you can do that so much by astrology. Whether it's going up or down. I really think you need another study, a body of study called cycles analysis or pattern recognition. Whether it's Elliott wave that's used for pattern recognition, or I like to use cycle studies. If I know I'm in the first phase of a certain cycle, I know it's going to be more bullish than bearish. From the last phase, it's more likely to be bearish than bullish. The astrology it represents points in time when there's a shift in consciousness. Okay, what was greedy or expansive or optimistic turns to pessimistic and fear. You go back and forth between pessimism and optimism.
Well, with the current software program that we have here, apparently we can make some tentative thrust in that direction that we're trying to determine whether it's up or down. And you mentioned using crests and troughs.
Yes. You can break this down into crests and troughs and see if the probability is higher for a crest or trough at that time of a change. Yeah, we can do that with the Dow because we got enough data with the Dow to do that. Let's do that. And that's a good one to go into. So let's go into chart and let's find the Dow again. Oh, there's one I wanted to check out, Disney. That looks like getting interesting again for those who trade individual stocks. But let's pull up the Dow Jones and get 60 years of data here, or at least 10,000 days. And filtered waves, parameters, 4%, good. Let's plot it, 4%. And now let's just look at the run frequencies for troughs, because we're looking for a bottom coming up. Let's see if there's something that stands out with bottoms here.
So the assumption is here you're looking at the bottom, so you're getting ready to buy at that point.
Yes, because the market's been coming down. So we're looking for something that has a high correlation to a bottom. And we're in Aquarius, so let's do the Aquarius to start with, see if anything stands out here. And then we'll do Pisces. Because one of the studies we're doing yesterday seemed to suggest the 21st or 24th as a big turn date for the stock market. Okay, let's just an eyeballs glance here. Moon in Capricorn has a high correlation to a low. And where is the moon now? We say it's between Taurus and Libra. Or between Gemini and Libra for the remainder of this. So as we look at this bar chart, we see Gemini's average, Cancer average, Leo doesn't correlate with a low. We don't look for a low next Friday in the stock market.
Is that going to happen? Really?
That's what it's saying. But it's saying maybe Virgo, which would be the following Monday, I think, and Libra, maybe there we get a bottom.
Well, on the geopolitical level, you have Bush almost maniacal drive towards war with Iraq.
I think that will cause the market to sell off initially. Yeah. And that's right in the time band we're looking for, the possibility of war starting around that.
Now, you said earlier that you felt that if the war actually started, that the price of gold would go
It would. Immediately it would go up, but within 24 hours, I think it'll come down. It's one of those things, you buy the rumor, sell the fact. Okay? We're anticipating war, so it's going up. As soon as we have war and it becomes a fact, I think it comes back down again. Unless the war persists. If the war isn't quick and it's not going the way they thought, then it goes back up again. But if it goes exactly, if it goes similar to the way it went in 1991, and they're getting everything their campaigns, trying to accomplish, then gold goes down.
So, Ray, that was a trough based on, a new low based on the 10% off of the last high, or what are the
4%.
4%.
At least 4%.
So
But it's actually more than 4% now from the last high, because you go back and look at that chart.
right.
Let's see if it shows it here. Go back and look at that chart. We were up here above 8,800, and now we're down to 7,800, so it's already been over 10%. There's been no 4% rallies. So all this is measuring is minimum 4% moves. Until we get a 4% move up, this line down won't be completed. We have to have a rally of 4% first before we can get this down line completed.
Okay. All right. Okay.
So it's just measuring minimum 4% moves.
So in other words, that could be for all we know, that could be the low right there, because if it goes up 4% on Monday, then
Yeah.
that's a low.
Yes. That'll be the 4% move.
So then in predictive, as Tom's question, in a predictive way, how could we really use that then to determine if, or we just, if it keeps going down, we assume.
Well, if we knew that Friday was a high correlation day,
I got you.
then what we'd do, this is a good question. You're leading me into something that's very good here. How do you know when you get there whether it's setting up properly? Okay? You have to understand the concept of isolated low and isolated high. Isolated low is when the low of that day is lower than the day before and the day after. Okay? Isolated high means it's higher than the day before and the day after. You can't have reversal unless it's an isolated low or isolated high. So when you get to a date that's pointing to a 4% reversal, and you get into that 1 or 2 day period, the first thing you must do is take out the low or high of the previous day. That's the setup. If it hasn't taken out the low or the high of the previous day, there's nothing to do. You're not looking for a trade until you take out the low or the high of the previous day. And once you take out one side, okay, you have to make sure that what it's taking out, where it's coming from, has been at least a 4% move prior to that. So if Friday was one of our high probability days for a reversal, it would be a low because it took out the low of the previous day. It's setting up for an isolated low. Therefore, we would be going long on the close if that was the case, assuming the next day it will not take out the low of this day. Okay? You wait for, the setup is you got to take out the low or the high of the previous day. The confirmation, well, the next step is not the confirmation. The next step is that low or high it took out holds the following day. And if it does, you're on to something. You're looking for a 4% move. But you got to get the setup. There's no sense getting in it if it hasn't taken out the low or high of the previous day. You're not doing anything until it's setting up properly.
Now, the study you just did with the trough, did you do the same thing with a peak?
Yes.
If it gives us an indication that it's...
Yes. Well, let me just go back here for a second. Where was the moon on Friday? Was it Taurus? I think it was Taurus. Did Taurus stand out here? 3 out of 30? That's about average. You'd expect 8%, and it comes out about 10%. So it's slightly above average, so it's possible. It's not 120 on a weighted value score. It would be something like about 110, 115. So it's possible. The only thing that would really show is a trough is if we made a low with the moon in Capricorn. Yeah.
I have a question, and maybe this is open.
Uh-oh. Let's go fishing.
Well, you're talking Friday, at 1 o'clock the moon went to Taurus Friday, but it was void for several hours. Now, if something is void, are you still counting it in the sign?
Yes. I'm still counting the sign. And my own observation with the moon void, of course, is it either goes sideways or whatever trend it's doing, it continues that direction gradually until you get into the next sign. It's not explosive, but it's either gradually continuing that direction or it's going sideways. Well, I mean, if I'm in a position and it's profitable, I probably wouldn't get out just because it went void of course. I'd want to see it go all the way to the next sign because it's going to go sideways or to the next sign. It's not going to reverse too often when it's void of course. It's going sideways or continuing the trend until it gets to the next sign.
This is the next question to that is, and this is one of those details, has anybody done a study of all the void of course periods and the correlations to movement?
You know, a long time ago I heard Debbie Kempton-Smith talk about that at a future symposium on commodities. I don't know that she really did a study or she was just applying astrology, how it theoretically should be used.
This might be interesting.
Well, let me...
Every planet, not just the moon.
Yeah.
Venus when it goes void, or Mars when it goes void.
Mm-hmm.
See what's happening.
Ted, have you done anything like that? Either Tim or Ted? Yeah, I mean, you two look at this as much as I do.
One course moon at various times and found what you found, Ray.
Yeah.
That typically intraday, especially when
Yeah.
you have a brief intraday period,
Right.
you have a period of congestion.
Mm-hmm.
And then after that, it will either reverse the trend or pick up the trend.
Mm-hmm. Yeah, that's what I've noticed too. I don't notice any explosives.
They're broken down to different signs or track other planets.
Yeah.
And I think it is definitely an area worth study.
Mm-hmm. And maybe Grace Morris might have looked at it. She spends a lot of time on the right time to trade or right timing with void of course.
And typically what I do is not initiate a trade when
Yeah.
I don't trust myself. in this void.
But maybe we should take Eric's idea in short options at that point. Uh-huh. Except the options aren't going to move that much in that short of a time because it's going to change within the day. You're only usually talking a couple hours.
It's absolutely fascinating, to watch intraday, when you have those brief intraday periods.
Mm-hmm.
You might as well just go get a cup of coffee or something.
Right.
It's so flat.
Uh-huh.
Yeah, I don't
Tim?
like the move void of course periods.
No.
The energy seems low.
Yeah.
And
Sounds like everybody's sleeping.
like whatever the trend was prior to the moon going void tends to stay the same.
Yeah, it's not going to reverse too often during that time and go the opposite way. Yeah. I think if you have a position on as profitable, you might be looking to get out right toward the very end of that void of course period. But yeah, you don't want to start a new position then. Wait till the next sign.
Well, and then you get into the discussion too, where, okay, there's a traditional void course that most people use.
Yes?
And then when the moon is paralleling another planet or it's not paralleling.
Only Ptolemaic aspects. Only those five.
Only
Don't get freaky on me there.
Okay.
Aspects, certainly, but in terms of determining the void of course period, right, yeah.
Mm-hmm.
Void of course is clearly defined as what it is. Yeah, right.
Yeah. They put their head on the desk when the moon goes void. I could see them doing that for 3 weeks when Mercury goes retrograde.
That's why I learned so much in school. I had to on the desk the whole time.
Channeling the books. Let's look at the moon in Pisces, see if we get something that stands out there with that 21st and 24th period. While I'm looking at the moon in Pisces, somebody can kind of tell me where is the moon on the 21st and 24th? We're going to go through just troughs again. On the 21st, and then probably Sagittarius on the 24th. That's always a big time. On Sagittarius. Moon in Sagittarius is what I'll refer to as the Sagittarius factor in my weekly column. And it's usually a very volatile time. Large price moves, especially in silver, which will tend to move 11 to 18 cents, and or start a move of 11 to 18 cents from a higher low, isolated higher low of the forms. And the T-bonds will usually move 1.5 to 3 points from a higher low that forms with the moon in Sagittarius. T-bond's a good market to trade when the moon's in Sag, and so is silver. Okay, let's look at the moon in Pisces now in this example. We highlight it, right-click it, hit breakdown. We want to look for moon in Sag, in Scorpio and Sag, see if it stands out here. Because that might be our low we're looking for. Whoa, we got it. Sagittarius. Okay, Scorpio's not bad either, it's pretty strong, but the moon in Sag is the strongest when the sun is in Pisces. It's a last quarter moon. Let's see, if we were to do a weighted value, let's just do the weighted value of the moon. Okay, 5 divided by 34 is what percent? 5 divided by 34 is 14.7%. So look at the moon in Sag, 14.7%. Now let's do a baseline of this. Let's go back here again. Exit, MA Studies, baseline, run frequencies. So February 24th, that's the first trading day after Saturn goes direct, isn't it? And we talked before about anything going down into a Saturn, it presents a good buying opportunity. And we saw the moon in Sag correlates with troughs when the sun's in Pisces. This is starting to shape up as a trade. Okay. So what I want to do now is look at the baseline of all of the instances when the sun's in Pisces, and then calculate the percentage of times the moon was in Sagittarius while the sun was in Pisces. And then from that percentage, divide it into this 14.7% to get myself a weighted value. Okay, we got 808 instances of sun in Pisces in the last 50 years or so. And let's see how many times the moon's in Sagittarius. So it'd be something over 808. And we hope it's under 80 times, so it really does come out significant. The average would be around 65 times, because it's 8.33% of 808. So you'd expect around 67 would be the norm. If it's anywhere around the norm, we got something significant here. Okay, 69. Looks pretty normal. 69 divided by 808 gives me a baseline of 8.54%. I didn't round that one off, but let's just see what it comes out. 14.7 divided by 8.54 gives me a weighted value. Wow, 173.3. Okay, it's critical, or it's extreme. It's extreme importance. It's above 150. So we really do want to be looking at when the moon's in Sag and the sun's in Pisces. And what days are those again, Mike? 23rd. When is it going to Capricorn?
25th at 8:10 a.m.
Okay, so it's only the one day. The 24th is the day. Some days you got it. There are some instances where it is the next morning or the evening before. I've seen that where there's spillover. So I don't think we're looking at, well, we might be looking at Friday night, definitely Monday, and maybe early Tuesday. That's our time band that we're looking for. If the market's forming a low at that time, and it's been at least 4% from the previous high, then we want to be looking to buy that day. And the next, we want to set our stop loss. If you're buying the diamonds, you want to set your stop loss, basis of Dow, 100 points below the low of that Monday. Okay? I don't know where you get in, but you don't want your stop loss to be much more than 100 points below the low of that day. You're probably not going to pick the low, but you're going to be fairly close to it, I would guess. And so your stop loss has to be 100 points below the low of that reversal day. If it starts taking that out, you got to use your risk premium. You may end up getting, it may end up going the way you want after that, but you can't take a chance because if it starts going 100 points below that low, chances are it's going to keep on going down. It's more of a breakout.
Wait, let me ask you a question. I'm trying to put all the pieces together. That is a critical piece you
Yeah.
just gave us right there. And I'm kind of new at this, but let me ask Ted something. It seems like the piece that Ted's bringing to the table would be,
Price.
based on what you said, was you ought to be able to take this piece of data and then give us an idea, a pretty good indicator of where we would be buying in at, wouldn't you?
Right, you can integrate the two.
So you can integrate the two, and you would use the universal quad for that, or would you use the planetary lines, or a combination of both?
You can use both, but depends on where the planets are.
So I have a request, which is when you do your piece, can you pick up on this and then take this example to the next level? In other words, do the integration of the two.
Yeah. Help us figure out price supports on that day, the 24th. That's your task. Okay. That's how Ted and I work good together. We find price supports and times. Okay. Let's see if that day happens to have a lot of volatility. Let's do a volatility study on that day now. That'd be the next thing I'd want to do. I want to see if it's a big range day. Maybe I want to do a lot of day trading that day as I try to get my final position. I might be in and out three times before I take the position home with me. So let's go to volatility. Formula. Yeah, we'll go with 3.5. Well, that's pretty big, isn't it? Well, let's see. Let's go with 3.5%. Volatility, run frequencies. So we want to see if the sun in Pisces with the moon in Sagittarius has a lot of volatility. We already determined the baseline is 8.4%. Okay, sun in Pisces. So we have 30 instances. Yeah, you can do a weighted value score for volatility too. Okay, nope, it doesn't stand out with the moon and Sag as being particularly volatile. So 2 divided by 30 is 6.6%. No, it's actually going to be less than 100 on the weighted value score. But it's interesting, the Friday before was volatile, which is Scorpio. 5 divided by 30 is 16.66. If I divide that by 8.54, I get a weighted value score of 195. So maybe, if you want to day trade, Friday's the day to day trade. 21st. And then maybe maybe it ends up low and you start out the next day a little bit lower. You take out the low of Friday, get your isolated low, and then you start your move up. That's how I would anticipate it developing. Okay. So that's pretty much how I use it. I'm looking at filtered waves. I'm especially looking at each sun sign is a separate entity and trying to figure out which Mercury-Venus combinations indicate volatility periods. And then within those periods, I look at the moon signs to see which are volatile. If I have a moon weighted value of over 120, it gets 1 star in my short-term reversal indicator that you see in the MA cycles report. If it's over 120, and I also got a Mercury or Venus sign that's over 120, then that day gets 2 stars. If I have a 150 on the moon volatility, a weighted value average, it gets 2 star. If the moon weighted value is over 150 and a Mercury or Venus is also in effect with over 120 weighted value, it gets 3 stars. Okay, that tells me it's a very high probability you're going to get 4% or greater reversal from an isolated lower high. When the weighted value of the moon is over 150 and you got a weighted value of Venus or Mars at the same time over 120. And all of that, the whole technique of identifying those days and how to trade them there's 18 steps to put on a trade. They're all shown in Volume 4, the new book that just came out on the stock market timing. There's 18 steps you follow to put on the trade. Okay? You wait for the setup, you measure the 4%, you look at the hourly, the half-hourly, stochastics, whatever oscillators you use, and make sure you're forming certain types of patterns. All of that's explained in the book to get the ideal trading setup. If you're interested in pursuing this, further, how you actually put on a position trade, how you put on an investment for a long term, how you put on a position trade for 3 weeks or more, based on using these techniques of cycles, astrology, and technical analysis, or if you're looking for the 1 to 3 day trades of 4% or more that we talked about with the sun and moon. John and Pete have put together the video of the conference we did in Newport Beach, which was a 12-hour conference. It went from Friday night through Saturday and Sunday. And it's all on video, comes with a workbook, comes with the 3 basic textbooks. And I think they do have at least 2 copies of those tapes here if you're interested. If there are any other questions, I'll be glad to answer them. Otherwise, I'm going to end my part of the presentation. We'll take a break, and then Tim will present his section. Ted. Yes, I'm sorry. Kara?
I'm curious to see how the result will be similar or different if you work only on crest in the case of Sagittarius and moon.
Yeah, the crest will be different. They'll give you a different result. I can show you that if you want to go through an example of the crest to show how they're a little bit different than the troughs. Should we look at that? Yeah, let's look at that. That's a good question. So let's go to MA studies. Let's go to filtered waves. Let's go to run frequency and do just crests. Okay? We fall, because it could be the Sagittarius is high on crest too, which just means it's a very volatile combination. And when that happens, you just have to look and see what it's doing when it gets there. But if we see that the moon in Sagittarius when the sun's in Pisces is low, then we know that the moon in Sag has a much higher correlation to a trough than just a reversal. So we're going to highlight Pisces again, breakdown, and let's see how the Sagittarius comes out here. Is it truly a trough or is it just volatile? And if it's 5 or more, well, okay, only one instance. So the moon in Sagittarius is 5 times more likely to be a trough than a crest. There were 5 instances of troughs, 1 instance of crest. And it might not have shown as very important as reversal if you looked at all of them. But it does show it's important as a trough if a low is forming then. It's not important if it's a crest. That's interesting. Good question, Akira-san. Was there another question? Yes, Frank?
You're doing stochastics. Are you using Fibonacci trader stochastics?
No, I use the stochastics on a program called Supercharts for the daily, and I use the stochastics on quote.com when I'm doing intraday trading. You go to quote.com and you can do a 1 minute, 5 minute, 15, 10, 30, hour, daily, weekly. You can do a stochastic and even set them up. I use a 15 and a 3 bar. There's 2 numbers you put in, one's 15 and one's 3. And what I like to see, I'm going to have to illustrate it for you here. When I'm buying, I like to see what I call a double looping formation or an oscillator divergence. Okay? So a stochastic goes anywhere from 100 down to 0%, measures in percentage. It's a relationship of high-low closes of a 3 bar to a 15 bar is what I use. And so you get 2 lines, one's solid, one's dot. Let's say the solid one's a faster one. I like to see it go down close to 0, come back up. At the same time, the dotted one is going something like this. So it's crossing it going down, it's crossing back up, going up to maybe around 20% or so, and then looping back down again as this comes up. Okay? That's the looping formation. And then coming up above 25%. Okay? This is sort of the way it's going to look. So you want to see them go under 20. First thing you need to see on a daily is below 20%. If you're looking on an hourly, you want to see it below 15%. If you're looking on a half hour, below 10%. If you're looking at a 5-minute, you want to see it get real close to 0. Okay, so it's really oversold. You want to see it starting to come up, the fast line, and then going back down again. The D line goes back down, or the K line goes back down again below D. It's a K and a D. The K loops back down, and it's all happening below 25%. You want to see this looping. It goes below, up, back below the D line, and then comes back up. Once it's above 25% and widening, we would call that slope. Once the slope is building, where K is widening from D, then that confirms the bottom's in, when they're above 25% and widening. Okay. Once I get this looping formation developing, then I want to go to my 1-minute chart. And I want to see the stochastics right at the 0 line. And that's what I want to buy, when it's on the 0 line and starting to come off it. Okay. So I got to see the pattern forming here on the half. This has got to be on at least a half-hour chart, if not an hourly or daily. And once I've got that, then I want to look at my 5-minute to see something happening that shows oversold. And I want my 1-minute to be actually 0% on the stochastic. And then I'm ready to buy when it's starting to move. And I'm holding the position. If the 5-minute is starting to turn up, I'm going to hold the position because it's going to go back down to 0 again a couple times. But as long as the 5-minute is starting to turn up and holding, I'm comfortable with it. I can use a 100-point stop on that DIA, and I'm okay, usually. And if it ends up, the 5-minute or the 30-minute ends up turning back down, I get stopped out, well, I take my loss. But as I say, it hasn't happened too much. Not with a 100-point stop. The other thing that can happen, too, you can get the divergence, which is nice, where stochastics come down like this. Maybe it goes down to something like 4%, K equals 4%, maybe D is something like 10% or 11%. And they don't really, well, they start going up, maybe it crosses, and it comes back down again. Let's see, this comes down like this, and this is going, and what's happening is the second low on the stochastics is higher, okay? But the price is lower. The price made a new low, but the stochastics didn't make a new low. That's what you call bullish divergence, bullish oscillator divergence, okay? And you like that, new low in price, but not a new low in your oscillator. So they're diverging. Oscillators, think of the price as weight, the weight of something. Think of the oscillator as number of men or women, explosive. And the opposite happens at the top. You want to get above 80% on the daily, preferably close to 90%. You want the 30-minute over 90%, the 5-minute over 95%, the 1-minute up to 100%. But then you like to see it go down, or up, then down, back up again, maybe not as high, and then coming down. And if you've got a formation like this, okay, you got the oscillator, higher price on the second stochastic high. The stochastic high is lower. The second stochastic high is lower. The price is higher. So you got bearish oscillator divergence. You got the looping formation above 80%. And then once K goes below 71%, that's a confirmation your top is in. And you're probably going to go down, at that point you're probably going to go down under 20%. Okay? That's just a technical indicator. You have the ability to do this on the Galactic Trader, but I haven't worked with it as much. So I've been, you tend to stay with what you're brought up with. And Galactic Trader, I got in touch with it maybe in 1997, 98, but I've been using Supercharged much longer. So I'm, you're just more comfortable with some of the technical indicators you've been using all your life. But as far as the Galactic Trader, there's nothing better than that as far as the calculations of what I want to do for market timing. This, to me, is the ultimate for somebody who likes to analyze and do research as I do. I mean, I'm just extremely grateful for the amount of time that's been saved by the stuff that's been put together in this Galactic Trader. It makes my work so much easier.
I got to ask, the loop thing.
Yeah.
So what's up with that? I mean, obviously it works.
Yeah.
Why does it work? I mean, is it just something that works, or is there something psychological going on?
Yeah, the traders want to fake everybody out. You know, I mean, how many times you see that you get a buy signal and it's too early? A premature buy signal. There's a lot of fake outs to go on the market. It's like they create this false hope before they want to make sure they wipe everybody out first. Okay, get all the weak hands out first. So you get that looping formation. They get the hint that something's changing. Everybody jumps off ship, and then it goes again. And they get the final group out of there, and then they can get it going. It's just a floor trader's vindictiveness against the average person. Right.
Or sell again.
Yeah.
Or opposite. So the fast case is going to react to them. So you look for the fake out deal when it crosses above the slow, then it comes back down again, and then it goes. Okay.
Yep. Yeah. Once your K is below D, and then once it gets above it, a lot of people are going in and buying, and those are weak hands. And then they push it down one more time below the D line. The K goes below D, and that's your looping form. Then you got to get ready to buy, because next time it comes up. Sometimes they'll do it 3 times, but usually it's just one loop. And the ideal time to buy for high probability of being right is when K comes back above D and goes above 25%, and it's growing in its distance away from the slope is building from D. You're not going to catch the absolute bottom then, but you're going to have a very high probability of catching the middle 2/3 of the move. You're going to miss the first third of it. You're going to catch the middle 2/3. Or at least the middle third. And a lot of people like to trade, Walter Bresler likes to trade that way. He doesn't have to get the absolute bottom or top. I do. I'm a Virgo rising. I got to pick. But he's happy just getting the middle third of the move, and he has his own oscillator, but it's basically up on something similar to this. Walter Bresler. He was my mentor as far as cycles analysis goes. Okay, any other questions? Okay, well, you've been a great group to speak with. I hope you've enjoyed this presentation I've given. I've enjoyed giving it, and I'm now going to turn it over to Ted Phillips after we have a small break, and he will now show you what price we're going to buy on February